head, don't close my eyes. Halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regardless, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regard, dear. It's all downhill from here. Remember life. Remember how it was. Tom G, Michael Jackson, all this shit. Say what up to Randy. The shoe. Say what up to Benny. Say what up to life and mortality. Feeling all my bikes running up. Not for me. 18, still in granny six. Give me something sweet. Bitch, I might like immortality. This is life, life, immortality. That's the way.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 14th, Valentine's Day 2023. And a major move is upon us. Lots of volatility in the markets. The precipitating cause, probably the CPI data. But CPI, PPI, CSI, it doesn't matter. On this channel, we look at the charts, we zoom out, we zoom in, and we're prepared for a lot of these things. Look at the previous episodes, the previous few episodes, right? The previous few live streams. We're not surprised. We're not at all surprised for Bitcoin to break this channel to the upside as it's doing. So we're expecting much, much higher. Okay, so that's the higher time frame analysis. We also give the smaller time frame analysis on this channel. We're not ashamed to zoom in to the 5-minute chart. Not at all. Okay, I've been that trader. I've traded on the 1-minute chart. I've traded on the 30-second chart. I've done day trading, scalping, all that stuff. So I'm speaking from experience. We can use these smaller time frames to find high quality entries, okay? But that's really, really, really stressful, higher level of difficulty, more risky, right? To trade in that way consistently. What we want to do is we want to formulate a high time frame thesis, and on the lower time frames, not pay too much attention to the volatility. So we're going to do that now. All right, let's get right into it. Looking at Bitcoin on the 15-minute time frame. All right, if you've missed it, this morning we had a massive move up, okay? That move was essentially price saying this range is no longer going to contain me, okay? That's the story. I always want to look at what does the market tell you, right? By market, I mean the chart, right? Whatever asset you're looking at. There's always a story to be told in the candles. You do not, I repeat, you do not want to be constrained by indicators. Indicators are great. Indicators are our friends. But use them. Don't let them use you. Be comfortable reading price action, naked price action, knowing how to read the story in the candlesticks. So we're going to start with that. The story in the candlesticks, as I said, is on the higher time frame, this is a double bottom. On the higher time frame, this is a level of support. On the even higher time frame, let's zoom out, 4-hourly time frame, you're looking at some sort of 3-wave move, retracement, 1, 2, 3, okay? And that retracement is essentially a retracement of these 5 waves. I believe, sorry, one second. It's something like this. Let's try that again. Okay, we have what we call an ending diagonal here. Yeah, there we go. You get a megaphone pattern, ending diagonal, that's quintessential. Ending diagonal in wave 5. Actually, sometimes you get ending diagonals that end up in a triangle like this, but a lot of times you do see these ending diagonals end up in the megaphone patterns. So you got, at least at a smaller degree of an Elliott wave count, you have some semblance of a 5-wave impulse that goes from that bear market accumulation resistance flipped into support right here, right? This purple box is basically the 234 days that Bitcoin spent sideways and diagonally down, consolidating, accumulating, right, in the bear market, 234 days, popped out, retraced, right, and flipped that previous resistance of 234 days to support. And this is what we're counting. 1, 2, 3, 4, 5. I understand this is not the beginning of the impulse in January, but for all intents and purposes, right, I'm just going to count this degree right here. So that 5 waves is retraced by these 3 waves. And I've shown this before, but if you pull out your Fibonacci retracement level from the bottom here to the top there, let's see, assuming this is the top of 5, I think here, right? You do see that this 3-wave move, right, came down to the phi ratio, the 0.618, which what we expect a 3-wave move that is wave 2, right? Because this would be a wave 1, this would be a wave 2. Wave 2 typically retraces between the 382 and the 618. Actually, more often than not between the 0.5 and the 618. Okay, it typically retraces in the form of a zigzag. Here we have a zigzag. What's a zigzag? It's an ABC retracement. It's a corrective pattern that's composed or comprised of 5 waves, 3 waves, and 5 waves. So we're getting everything textbook, okay? Again, probabilistically, that's what's happening right now, because we know you typically get a zigzag down to the 618 of your prevailing 5-wave impulse for wave 2. So that's the story. That was our high time frame analysis on the 4-hourly. We even have a higher time frame analysis on the daily and the weekly, but we're not going to get into that right now. Okay, for the purposes of what we're explaining on this live stream, let's just stick with this high time frame analysis. And so we have a bullish bias, okay? And lots of reasons why we have a bullish bias, looking at the DXY and all that stuff. But again, let's just assume all of that is, I'm not going to regurgitate everything we've been talking about for the past few months. Right now, let's just assume that our bullish bias has been seriously supported by solid evidence, okay? So this thesis isn't out of nothing, right? So that's why we're comfortable. We're comfortable being bullish. You want to be bullish after the data tells you to be bullish. And for the past 234 days, I've been bullish. Past 300 plus days, I've been bullish, right? Because even before we came into this channel, I was expecting that we were going into accumulation. And as a result, I've accumulated. And I'm going to stay bullish for the next 2 to 3 months, up until which point we exhaust the initial impulse, right? That impulse of 5 waves to the upside on the high time frames in the bull market, okay? 5 waves, and then we know that we are likely to get 3 waves down, or some semblance of 3 waves down, flavor of 3 down to a low, to reaccumulate once more for the halving in 2024, around April, May, June, something like that. In any case, let's now go back to our small time frame analysis, having established our bullish bias on the high time frames. All right, that's how you want to do it, guys. You do not want to start out on the minute time frame, 5-minute time frame. Don't want to do that, or else you have no clue. And when you have no clue, you can go up and down. And when you can go up and down, you have no confidence. To be able to make serious money, you need confidence. Or else you're just going to make a little bit here, a little bit there, a little bit here, a little bit there. And the worst part about that, let me tell you, the worst part about that is when a lifetime opportunity presents itself to you, you will not have the confidence to take it. What do I mean by a lifetime opportunity? That's what I said, right? Lifetime opportunity. Let's open up another chart for this, okay? This is the lifetime opportunity that I'm referring to. Give me 1 second. Let's open this up, because this is important. If you're always trading in the same way, you're going to miss out. And this doesn't come about all the time. You don't trade the same markets every day. During the course of a career in trading, you're going to trade sideways. You're going to trade sideways markets. You're going to trade down markets. You're going to trade up impulsive markets. You're going to trade different markets. You need different strategies to take advantage of each and every type of market. If you're always trading the same market, you're not going to be able to do that, okay? You're always trading the same way, rather. You're not going to be able to do that. So here is the once in a lifetime opportunity that I've been referring to, or I'm referring to rather. It's this: the fact that Bitcoin and the rest of the cryptocurrency markets is going into a third wave. Okay, when I say third wave, obviously you all know, who watch my work, who study elite wave theory, you gotta specify the degree. I'm talking about minor wave 3 here. But to be honest, any high time frame wave 3 will give spectacular impulses, right? And we're just so happen to be at the cusp of this minor wave 3 breaking out to the upside, which should give generationally strong gains to the upside. Not knowing where we are. It's like, you know how to drive, yeah? And you are capable of getting to many different places, but you don't have a map. And you don't really remember how you got to different places, and it's really difficult for you to get back to those places. But you can drive. You have the skills to drive. You can drive, you can reverse. You can make left and right turns. You can do all that stuff. But how much more powerful is the pilot who knows where they're going, who has a decent idea of the terrain, who knows, oh, I should switch my traction mode on or off. I should switch my high beams on because there are no streetlights in this area. Or I should probably drive slower here because there's torrential rains, or there's snow, or there's ice on the ground. Do you understand what I'm saying? Like, these high time frame maps help navigate the terrain. If without that, I would have been trading up and down and up and down and up and down in this region, got chopped up like most of everybody else, right? 234 days of up and down trading. With the map, we understand what that is, and we position ourselves to take advantage of what I'm saying on the title page, which is crypto's going much higher. All right, having established that, let's get into the small time frame. I know a lot of you like to trade small time frames. Maybe you're degens. I'm a degen. Like I said, I trade small time frames as well, insofar as I make pinpoint entries on really high leverage sometimes, which requires me to be really precise. All right, on the small time frame, on the 15-minute time frame, like I said, this range is support, okay? But what to notice in the immediate short term is the fact that we've gone up, although we've broken the top resistance of this range. Notice how we broke it in 1, 2, 3 waves. What do you know about 3-wave movements in Elliott wave theory? They are corrective. Yes, I know that you said that. They're corrective. So, if they're corrective, you know that they need to be retraced upon. How else do we know that this move up is corrective? Okay? And by corrective, I mean it's not pure impulse. We know that because we have a guideline in Elliott wave theory that states that waves of the same degree are equal or comparable in time and in price, okay? So we should expect, if this were really a pure wave 1, we should expect 5 waves up and 3 waves down, and then we should have gotten a move to continue, right? That would be 5 waves up, 3 waves down. Then we should expect another move up for that wave 3. But we didn't get that. We started going sideways. So you know already the time, there's 1, 2, 3 15-minute candles to go up. Already you know that there's no way in hell that this is pure impulse. No way. Because you have 3 waves here and a lot more than 3 candles here and a lot more than 3 candles there. So there are 2 clues, quick, easy clues to tell you this is a corrective move. Does that mean we're not going up? No. That just means we may come down first before going back up. And it's likely that when we do come down, we come down in a volatile manner before breaking up fast. Does that make sense? All right. The second part to this is the following. You can see quite clearly that if this is 3, right, you know that this is going to be a flat correction. It's 2 different types of, well, there's 3 types of corrections according to Elliott wave theory. There are flat corrections, there are zigzags, right, the 535 that I spoke about a few moments earlier, and there are triangles, okay? Every single correction that is possible on a chart falls into one of those 3 categories: flats, zigzags, and triangles. You know flats come in 3 waves. Your initial break of structure is always going to be 3 waves, okay? So this should be also expected, a 3-wave move here, because we know a flat correction is a 3, 3, 5, meaning 3 waves in A. Let's call this A right here. 3 waves in B and 3 waves in C. What else do we know about a flat correction? See, this is the power of learning your shit. This is the power of studying your theory. It's not just for pencil necks, nerds, people who like to, be theoretical. It's very practical, and it can make you a lot of money. It can save you a lot of money. Okay, this is why you learn your stuff, because this stuff works. But you won't know it works by just reading about it. You have to apply it, observe it, and then make it your understanding. You have to understand it. You have to know it, or else you don't know it. Does that make sense? You can know something theoretically, but you won't practice it until you understand it. And you don't understand it until it becomes part of you, until you don't believe it, you know it. There's a difference between belief and knowing. No belief is necessary because you've spent 10,000 plus hours. I would say 100,000 plus hours, because I've traded a lot more and charted a lot more than 10,000 plus hours. 100,000 plus hours to integrate it. And that's like, can you walk? Yeah, I believe I can. No. If you can walk, you just do it, right? You don't believe, you just do it. It's beyond belief. You act on it. Can you breathe? Yeah. You don't think about it, you just do it, right? So, another thing we know about flat corrections is that they're 3-3-5 constructions, and that the minimum retracement for the B wave, which is the counter to the A wave, yeah? Every corrective wave has a counter. So the A wave comes in 3, the B wave also comes in 3. Minimum retracement for that B wave is going to be the 7, 8, 6 Fibonacci retracement level. That's very useful because if we pull out our trusty Fibonacci retracement level from the bottom, you want to take the bottom, the orthodox bottom, right, of this A wave, which is here, okay? That's the top, okay? So we're going to take our Fibonacci retracement tool, like so, pull it to the top, right, bottom to the top for retracement, and we will now expect this A or B wave, which goes thus far, it seems, right, B waves can be tricky as we know, but it seems like it's going to go something like this, okay? A lot of people are going to be scared out of this market by that move. A lot of shorts are probably accumulating as we speak. This is the power of learning the trends, the what's the word I'm looking for? Learning the tendencies of price action. Okay, I don't know what this B wave is going to look like. This B wave can look like so many things. It can be compounded. We've seen it before. B waves can look like this. Sorry, it would be, you know, the initial break of structure would be down, right? Because this is up, this B wave. So this A wave is going up, this B wave is going to go down. The last impulse that results from this AB base, or this A wave and B wave flat correction, is going to be up, okay? So this B wave is generally going to be down. It can go down, down, or down, up, down. It can go down, up, down, up, down. It can look like a lot of things, right? That's the trick about B waves. But as... Oh, sorry, Google is just going crazy. As mercurial and as confusing as B waves can get, Elliott wave theory gives us the tools to be able to predict, yes, I'm using that word, predict, with a high degree of probability, the range of that retracement. So if this is right here, I pull the Fibonacci retracement tool to say minimum, we're coming back to 21.7. Maximum, we come back to 21,000. Okay? So if I'm hiding, right, if I'm in a long, which I am, I want to make sure, let's zoom out for a little bit, okay? If I'm in a long, I want to make sure that I hide my stops, my liquidations behind the phi ratio. Does that make sense? Because this has proven now. Hold up. I'm seeing something else. I'm seeing something else. I'm seeing something else, my friends. See, this is the thing with corrective waves. We may be seeing... Oh, I think this is even more likely. I think this is even more likely. I think this is the A wave. I think that is the A wave. And this B wave now can come even lower. Okay, this is good. Sometimes you see something. It could be, I don't think that this is the A wave. I think that's unlikely. I think the A wave comes here. We're going to get into that. We're going to try to reread this entire range of corrective patterns and see if we can isolate the 2 degrees of AB basing and a pivot. It's a task. It's a chore. It's not easy. But what you want to do for good risk management is take the worst case scenario and hide behind that phi ratio. For example, this is the lowest point of an initiation point of an A wave. I'm going to take that. I'm going to take the highest. I'm going to take the highest that the A wave can be, which is there. So if I really want to be cautious, I am going to hide my phi ratio I'm going to hide my stops, my liquidations, behind that 1618, which is at actually 2772. And why do I like that? For the following reasons. Look at where this phi ratio is, and look at what that retracement would do. That would essentially give us a retest down back to our 400, what is it? Let's zoom out and see how long it is. It's like 430 days or something like that. Let's erase this for a second. I really like this. See, this is some confluence. I would not at all be surprised if that happened. Let's see. So this trend line, this dotted trend line, is 438 days. 438 days of resistance, broke into the upside, retested as support. That B wave would do that. Do you understand? That I love. I think that is really, 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 really possible. Or probable. Everything's possible. I think that's really probable. So again, very bullish, even on the medium time frame. But immediate short term, quite bearish because of this B wave. And this B wave, I would say, is very likely, let's just put this in, right? Guys, if you're getting value from this, please like, share, and subscribe. I don't see anybody else talking about this in terms of, just reading these corrective patterns. Something like this, yeah. Let's just put it up here to be super conservative. Worst case scenario, I love that way of doing things. Let's say this is something like this. Don't be surprised if that happens right here. Now let's turn the lines on for this so we can see. Does that make sense? Don't be surprised. I see it all the time. I've seen it so many times. I've been in these trades many times. So much experience getting shaken out of trades. I've been that guy who doesn't understand the magnitude of the B wave and misread the initial break of structure. Didn't take a conservative approach. Thought I was out of the woods. Got taken out by that B wave. And what's going to happen almost instantaneously as we touch this resistance flip to support is we're going to the moon. Those high time frame targets that we've been talking about for Bitcoin on this channel come with volatility. You don't get quick, big movement without big volatility. Expect big volatility. And that is the volatility to the downside that I think we should expect. Now, what is going to be the trigger? Is it going to be CPI, PPI, whatever? It doesn't matter. That's the point, right? Regular traders wait until C-SPAN or Powell comes on and talks about this and that. The elite traders have already prepared for it in advance. And when it happens, it happens. But they already know because the market's telling them. The story's in the candles already. Do you understand? Your average trader is going to wait until the announcement, not have any particular plan, and not really know what they're doing. They're going to go, it can go up, it can go down, I don't know. Nobody knows 100%, but with a high degree of probability, formulating a thesis, a bullish or bearish bias, gives you the ability, and then good risk management obviously, gives you the ability to circumvent all of that. Not saying it's easy. It's not at all. It takes a lot of time, practice, but that's what I'm thinking. So, actually what I'm going to do now is I'm staying in my positions. I'm not changing. I'm in a massively leveraged long for Bitcoin in particular, okay? So what I'm going to do is I'm going to take my own advice. Right now, I'm a few $100 above here in terms of my liquidation point, I'm going to hide even lower. So I'm going to add a little bit more to the margin. I'm going to do this right here with you. I'm going to add a little bit here. Okay. I'm doing it right now. Transfer. Here we go. And I'm going to make sure what we're going to do on this, what we're going to do on this episode, actually, we're going to prepare and make sure that every single last position in our watch list is safe from that volatility. Okay? Now, some assets may already pump before, some assets may already pump or may be pumping or whatever. I don't know what I'm trying to say. I'm double tasking. Let me focus on y'all. Some assets may pump before this happens, and their retracement is not going to be the same type of retracement. They're not going to be doing a B-wave retracement, okay? We're going to look at everything on a individual basis, because even though the markets may move up in concert and may move down in concert, they're at different, a lot of times, they're not always at the same, they're not always in the same mode of price action. That's what I'm trying to say. Okay, I got that phrase out. Okay, now let me add to my margin for my, this is my really high leverage line. I always like in my portfolio to have one like moonshot, super leverage to the tilt, almost disrespectfully long or disrespectfully short trade, right? If we were at the top of the market macro, and I felt like, you know, we could have a big move down, then I would be disrespectfully short. But now, you know, because of my bullish bias, I'm disrespectfully long. And so here we go. Okay, perfect. Okay, so we've done it. We're hidden officially. And this is adding risk, but again, you have to take some risk, right? You have to take some risk in the market to make it. But it's not about not taking risk or taking risk. It's about measured risk, intelligent risk, right? You want to take intelligent risk, and it's all about making these educated guesses. And this is how we make our educated guesses. We learn whatever system of trading that we espouse. We learn it as well as possible. We master it. And then we apply it as diligently as possible. We do our best. That's all you can ask. And let the chips fall where they may. So far so good. The results speak for themselves, right? But, these are my results. You have to build your own system. You have to build your own style. And you can't pay for it. No course in the world is going to give you that training, that experience. You have to develop it on your own, whether you pay for a course or you don't pay for a course. It doesn't matter. Everybody's going to be different, right? But at the end of the day, you're going to have to put in the 10,000 plus hours to even get comfortable in whatever system you espouse to trade these markets. And let me repeat, it is not easy. Anybody who says trading is easy, it can be if you're good at it and you're experienced, but it's not easy at first. I'll tell you that much, right? It's not easy at first. So let's do that. So let me see. Okay, I like this. So I'm hidden right now down here, okay? I'm hidden all the way down here, and some of you may think, Dean, what are you talking about? Like, dude, you're being paranoid right now. We're going up. We're mooning. Yes and no. There's a likelihood, there's a chance that this is a three-wave move. If this isn't a three-wave move, and we happen to go up from here, okay, great. Doesn't look like I'm wrong in saying that this is a three-wave corrective move. This looks corrective. It smells corrective. It feels corrective. I think there's a move down from here, which would not necessarily invalidate this entire accumulation range. Please understand, this move does not invalidate. This move does not invalidate this as being legitimate accumulation. This would essentially be a massive spring, what the Wyckoff accumulation people call a spring. A dip down below the bottom support to grab liquidity, okay? A dip down below the bottom support to grab liquidity. And from here, you're talking a 6% move, which isn't the most, right? Obviously, when you're leveraged really high, that's a big deal, right? But, you know, that's not that big a deal. All right, now let's do what I said, and let's try and count this, these corrective waves. And we did this yesterday, but it's important to try and use the most recent data to make sense of what you're seeing. I'm comfortable with this being our pivot, right? When we're talking about pivot in the market and a flat correction before a pump. I really like this coming back down here. I really like that coming back down there. Because this, to be honest, hasn't been duly tested. And yeah, if you look, all the while we've been sort of consolidating here, you never really touched it. Do you see? You never really touched it. And that's important resistance to retest as support. It's important. It must be retested as support because for 400 and whatever, how long I said, 440 days, it was resistance. Our downtrending resistance for Bitcoin since $69,000. Yeah. So that being said, let's count backwards. If this is our pivot, I would say, okay. I would say that is my initial break of structure right here. And that is my counter. So that's my first degree of A-B basing right here. So let's just put lines. That's big A, big B. I would say that's small a. I would say this is small b right here. Do you see that? 1, 2, 3. I like that. I like that. So I would say small a, small b, big A, big B. We did that backwards. And I think that this is the massive pivot. The tough thing, and I'll repeat this, the tough thing about counting these A-B bases is that there is no rhyme or reason for the first degree being the biggest, the second degree being the biggest, or for all of them being the same size. Sometimes the pivot is tiny, I've seen. Sometimes the first degree is tiny and the second degree is massive. There's no rhyme or reason. There's so much variance. But why is this useful? Because it gives us an idea of what is likely happening. And once we can count 2 degrees of A-B basing and a pivot, we know that the consolidation accumulation is over, or distribution if you're going from up to down. So that's how I'm reading it thus far. Okay? Yeah. So we'll see. I really feel like this is corrective. I think this is an A wave, a massive A wave right here. It just makes sense. It makes so much sense. This right here was impulsive, but it was correctively impulsive. And the only way you can be correctively impulsive is that you're the last leg of a corrective wave. A wave, B wave, C wave. And at first, we were too zoomed in on the small time frame. We were seeing this A wave, B wave, C wave. No. This is the A wave right here. 1, 2, 3. This is the B wave. 1, 2, 3. right? We can actually do that. Let's fix this. Guys, you seeing this? If this plays out, how many people we can see on the coin glass, how many people that are correctly long, because on a high time frame, one should have a bullish bias. If you're looking at the charts and you don't see the bullish case, and that bullish case doesn't trump probabilistically your bearish case, I don't know. Like, I don't know about your reading skills, but even though you can correctly have a bullish bias, how many people are not going to see this? If this happens, how many people are going to be surprised when Bitcoin dumps 6% in one fell swoop in a few seconds, and then all the almost immediately starts pumping to Valhalla? How many people are going to be liquidated? How many longs are going to be liquidated? So many. How many shorts are going to be liquidated? So many. The only way you can survive massive amounts of volatility is not only to have a plan. People like to say have a plan. Everybody has a plan until they get punched in the mouth, according to Mike Tyson, right? You have to have a good plan. You have to have a smart plan. You have to have a plan that's highly likely to play out. You can't just have any plan. A shitty plan is a shitty plan. Might as well not even have a plan, right? You got to have a great plan. This is, I think, the best plan, right? Even if it doesn't play out, we're fine in our lungs. Perfect. But if it does, we're protected. We're hiding behind that phi ratio. And the phi ratio is the Fibonacci retracement of this three-wave move. Okay, that would explain so many things. That would explain how we got an impulse there and we're still hanging out. We're not continuing, right? It's because we're forming another corrective wave to go down. Okay, I hope everybody sees this. I know a lot of people are going to look at the thumbnail, stop at that point, and that's okay. If you're on spot, who the hell cares? I'm talking to, people looking for entries, doing, leverage trading, because if you're on spot, you can just as well buy anywhere here. We go down for a second, then we go back up. Nobody cared. Now, you're not going to get liquidated. You're not going to get stopped out. But if you're on leverage and you're building longs in this area, be very careful, because this is very likely corrective. So that's what I'm seeing with Bitcoin. Okay, now that we've looked at price action, we've extrapolated a probable or a likely story of what is to come next. People like to say, don't predict. Bullshit. People who say that don't know how to predict. 1, 2, they're hedging too much. They're hedging too much. You gotta predict to make money, to make serious money, or else you're always hedging. You're taking profits way too early, right? You're never sure of anything. You're going up and down, and you can't take advantage of impulses. You can't take advantage of trends. You gotta predict. You just have to predict conservatively, intelligently, responsibly, with good risk management. That's what you gotta do. But don't predict. I disagree with personally, right? If you don't predict, you put a hard cap, a strong cap on your earning potential. Okay? So our prediction is long, but with some volatility, some intermittent volatility. And now let's look at what the indicators, our favorite indicators say, all right? Our favorite momentum indicator is the stochastic RSI. Let's start off on the higher time frame, daily time frame. Okay, daily time frame. Our stochastic RSI indicator, momentum indicator, our favorite momentum indicator on this channel, says we're bullish. Why? Because we're completely oversold, and we've been hanging out in oversold position for quite some time, for a couple weeks now. Yep. Since early February, we've just been hanging out in oversold position, and we've actually crossed bullish, right? Past few days. So our high time frame analysis of being bullish, or, is now corroborated by our indicators. This is how you use indicators, my friends. Don't let indicators use you. Use indicators. Understand how to read price action. If you don't, you won't make it, because indicators also have to be interpreted. So many people say, well, the stochastic RSI is oversold, or stochastic RSI is overbought on this time frame, and that's such a big time frame. We're bullish, we're bearish. No, that doesn't work like that. As you can see, even on a daily time frame, you can stay oversold in a trend. Trends don't give a damn about your momentum indicators. Your momentum indicators cap out. And I've talked about this before on the channel, but the idea is when you're putting in a weekly move or a monthly move, the daily is going to stay overbought or oversold because that time frame is too small to encapsulate the magnitude of that trend. Yeah? So stochastic RSI, momentum indicators, any momentum indicator, if you don't get the time frame perfectly right, you can't properly use it as a buy or sell sign. It's not that. It's a momentum indicator, but it's also very important that you get the time frame right. So on the monthly time frame, you're oversold, all right, buy. And then you're overbought, okay, sell. Yeah? On the weekly, the daily, you might have to wait a while before they start coming back down. So indicators also have to be interpreted. So why not just start from scratch, learn how to read price action. Learn how to read the story that the market's telling you. Smaller time frame, 4 hourly. What do we see? Ooh, see, this is kind of telling us a little bit more of what we expected. So this is very nice. 4 hourly time frame, we put in a bullish divergence, right? So here we have a low, so two lows. A low and a lower low on the price action. A low and a higher low. Sorry, let's make this bigger. I'm sorry. I hate all right, that's better. Okay, low and a lower low on price action. Low and a higher low on momentum. That should lead to a move up. That move up was had. We got that move up. Okay? But now what do you see? 4 hourly time frame overbought. Can the 4 hourly time frame stay overbought? Yes. But can it also cross back down? It can. So based off of our thesis, small time frame thesis, the story that we said was likely to play out with this 450-day resistance turning into support, needing to be flipped into support, don't be surprised if that 4 hourly momentum indicator on the RSI, stochastic RSI, come back down a little bit, okay? At least to here. Won't be surprised if it comes down to here, okay? So that's the 4 hourly time frame. Again, the momentum indicator are saying what we're thinking, right? We looked at the price action, we looked at the candles, and we thought, oh, this is happening, this is likely to happen. Momentum indicators are saying, yup, that's what I see too, right? This is how you use indicators, corroboratively, or else you literally put a cap on your skills. It's like using training wheels and never learning how to take them off. You can't really ride. Do you understand? You can't read. You want to be chart literate. Okay? So, it's like, I don't know how many musicians we have in the chat or on the stream or watching the replay, but it's like if you play guitar and you only learn how to read tablature and you never learn how to read standard music notation, you put a cap on your progress. Yeah, of course, you can be an excellent guitarist, never even reading music and not knowing how to read anything but tabs, but things get harder. If you get a gig and somebody gives you some sheet music, you can't read it. There's a rhythm, there's some timing that you can't tab very accurately. You put a cap on your development. Do yourself a favor. Don't sell yourself short. Learn to read price action. Learn to use indicators corroboratively. All right. Hourly time frame. We went up, and we were in that overbought territory right here. Okay. So what's interesting here is this: higher high, right? This is a high. This is a higher high on the chart. Okay. Price is showing me a higher high. What's it showing you here on the momentum? An even flat. Okay, that is bearish divergence on the hourly. Okay, so is that going to play out completely, or is that it? Has that bearish divergence already played out here? It may have, or it may not be finished. It may be consolidating here to come back down like this. So again, our stochastic RSI momentum indicators are saying the same story that our price action read is saying. Let's go one more time frame, 15-minute time frame. This is super small. Again, same story, guys. You see this almost perfectly. This is your A wave. Your A wave. 3 waves up, go into overbought territory. Now you see wave 1, wave 2. What do you think comes next? That is what you should expect. This is exactly what the momentum is telling you on the 15, the hour, the 4 hour, the daily. Our initial read in the markets are being corroborated by our momentum indicators. Do you expect that this 1, 2, 3 pivot down, okay? Do you expect that move? Because this is exactly what the momentum indicators are saying. Guys, if you're getting value, please like, share, and subscribe. I'm not seeing anybody talk about this. Obviously, everybody's going to be different. Everybody's going to be using different systems. But any other Ellioticians reading the market like this, right, giving you high time frame, low time frame, a lot of people that are, don't worry about the small time frame volatility. They look down on people that are day trading and using small time frames. They do that because they can't read small time frames. And they tell you just buy and hold. All right? Or they tell you, it can go up, could go down, but I don't know, dollar cost average, because they don't have the skills to trade on an intraday basis, right? I'm giving you my strategy for this market mode, or for this, the trend of the day that the market's in. I don't tell you, like, yeah, obviously for the past 400 days I've been saying buy, but I'm telling you that because of my high time frame analysis, not because I'm a perma bull. I don't give a damn about being bearish or bullish. I care about making money, being as profitable as possible, right? So if we're in accumulation, if the high time frame trade, the bias should be up, should be bullish, I'm going to be bullish, and I'm going to continue to be bullish. But I'm also going to drop down to smaller time frames and say, I'm expecting this in case you want to make an entry. Now, how do you play this? Should you enter shorts here? You can, but that's not that smart, right? Why is it not that smart? I'll tell you why. Because again, you're dealing with something that is super unpredictable in a B wave. There's too much variance. Remember, B waves can retrace between the 786 and the 1618 of an A wave. That being said, you can even make a higher high here, a significantly higher high, and still come down a ton, right? Because if you take your Fibonacci retracement of the A wave of this B wave, you can come all the way here, all the way to 22.5, and still put that C wave in. And there's no telling what this B wave is going to be like. So if you like to get chopped up, by all means, try to enter this move. That's not smart. Also, because expect this to be super volatile. It's going to happen before you can even blink. It's going to come up or going to go down. It's very likely going to come up so fast that if your TP isn't set, or if your TP doesn't get hit, you're going to get smoked. So the smart play to do is not to try and short this. Even though it's going down significantly, or it's likely to go down significantly, the smart thing to do would be to make sure you can enter a long for what comes after this. Okay? If that wasn't clear. Not financial advice, but, this is how I would see it. If you want to do otherwise, then by all means. If you want to go short, knock yourself out. You want to go long on this, knock yourself out. But there's not too much more real estate according to this A wave right here. Okay? There's not too much more real estate in this move, but do expect that final move before our full, unadulterated, pure impulse to the upside. And these candles are going to blow your mind. Most people are going to get completely flummoxed because they have no high time frame map. They have no idea where we're at. They're just kind of putting their hands out, touching for feelers, eyes closed. They're focused on the macro environment, the economy, all this stuff that is extraneous to trading, to be honest. To a true chart technician, all that stuff is nothing. It's noise. You can see versions of it in charts. Okay. That being said, I'd be remiss if I didn't talk about the US dollar currency index, the DXY. Okay. This is where we thought it would be. Okay. Still stuck at resistance right here. Okay. And what is this resistance? This is the 80-day resistance. I'm not going to measure it. I've talked about it so much. But it's about 80 days, right? And we have multiple data points. We have 1, 2, 3, 4, 5 now. Every single time we come up against this right here, we find resistance. However, there's another resistance level. Another resistance level that a lot of bulls, people, DXY bulls, dollar bulls, people who think Bitcoin's going to 0 or 10,000 or 12,000 or something like that, they fail to realize that even though the dollar's at an 80-day resistance, its biggest nemesis is this 460-day resistance. I think it's 460 days. Let's zoom out for a second. Let's double check that. But it's a really long resistance, okay? Sorry, really high time frame. That's what I meant to say. Here we go. Okay, and why is this not just a random line on a chart? A lot of people draw random lines on the chart, okay? A lot of people who draw Let's try it again. A lot of people who draw lines on charts don't even know how to set their charts up. High time frame price action needs to be set up with the log scale. You can kind of get away with it in traditional finance because things don't move as parabolically as they do in cryptocurrency. And that's what they've managed to escape with, okay? They've made money. They've been able to present in public. People look at them as authorities in technical analysis, but honestly, they don't even know how to set their charts up correctly. I'm not going to say who. You guys keep your eyes open. Pay attention. Do your own fucking research. If somebody's showing you a chart, you're paying them money, and it's high time frame, especially in crypto, and they don't have the log scale on, ask for a refund, and it's not even their fault. It's your fault because you didn't do your own research, and you didn't learn anything about how to set up a chart, right? That's trading 101. Learn that this log button is not just for decoration. It's not, I could tomato. No. It breaks your chart if it's not set up correctly. I mentioned that because when you draw this line on the log scale, you can see that it's accurately serving as support for the price of the US dollar for many, many, many months, okay? Also right here, and now we dumped below it, okay? Actually, look at this. Guys, definitely like this video because I don't see anybody talk about this. Nobody. And I watch a lot of my peers, respect to all of them. They all have strengths in various fields and various sort of styles of trading and analysis. But I haven't seen anybody talk about this. And what am I going to tell you is this. If you look, we have data of this 595 days, okay? 595 days. This isn't some random line that I like to draw and post on Twitter or on TradingView ideas for likes. 595 days. I'm putting money on this. I literally am. I'm putting money on the fact that this is reliable indicator. This is a reliable trend. Trend line, not all trend lines are created equal. You need two things for a good trend line. You need high time frame, meaning I'm on the daily chart. I have 595 days of data to say that this is a reliable trend. And I have a lot of data points. 1, 2, 3, 4, 5, 6. Do you see how that works? On the 5-minute time frame, you go on the 5-minute time frame, you draw a trend line. That 5-minute time frame trend line should be about an hour or 2 hours. You see what I mean? It should be significant vis-a-vis the time frame, right? Does that make sense? On the 5-minute time frame, a viable, reliable, important trend line would last 2-3 hours or something like that, at least, yeah? And would have multiple data points. Anytime you have multiple data points and it lasts long, you have a viable trend line. It's not just a random line on a chart. And obviously, you have to make sure that your chart is set up correctly, log scale if it's high time frame. Now, having established the validity and the veracity of this trend line, you can see that the US dollar currency index broke this trend line to the downside early January 5th. What do we know about breaking high time frame resistance or important resistance, significant resistance? Or sorry, did I say resistance? I meant support because it goes down, yeah? So the dollar broke support of this 600-day trend line to the bottom. What do we know about breaking significant resistance or breaking significant support? There are so many things we don't know when we're trading. So many things we don't know. Nobody can tell you. People love to say that. Nobody knows. Nobody knows. Nobody has any clue. People, speak for your fucking selves. They don't know. So they assume nobody knows. If you don't know at all, if you have no clue, you have no business trading. You should have some clue, or else how do you go long? How do you go short? Yeah, you can, I guess, do it with a bot and just play the probabilities, but, whatever. The idea is we know that high time frame support has been lost, and we know that it needs to be retested as resistance because that is a guideline of trading. That's a principle. I'll upgrade that. I'll say that's a principle of trading. Doesn't matter if you're a Gann trader, you're a Wyckoff trader, you're an Elliotician, you're a Dow trader. It doesn't matter. High time frame, significant support, broken, has to be retested. And what do you see on this chart? Where's the dollar going? Nobody knows. That's not true. We know because the chart is telling us a story. It's already told us. Having broken this, I need to retest it. So very likely that the dollar comes back up here to 104.5 to retest that. And that, my friends, is where you should expect a massive rejection. Does that make sense? Let's zoom in. Nobody's talking about this, my friends. Nobody. But, you need to do your own research. If you have, you would see that this is very clear. Another thing is, what do I always say about consolidating at resistance? What do you see here? That's bullish, actually. It's really bullish. It's bearish if you zoom out, right? You zoom out properly, there's nothing bullish about the dollar. But very small time frames. you do expect another leg up because you reached this 80-day resistance and you didn't put in a rejection, a 3-wave move down. No. You consolidated at resistance and you're very likely to pop up and out. Once you hit that 600-day resistance, though, it's lights out. Okay? And it's likely going to take the form of 1, 2, 3. It could be a flat correction, rejection. It could be a zigzag correction. We don't know. But it's lights out once you get here. Okay? We have high degree of probability. Okay? We're not 100% on anything. But we know probabilistically that the dollar is going to come back to this area because it lost this area. And that this is an important level because if we zoom out enough, this is 600 days. You do not lose 600 days of support on a daily time frame without retesting it as resistance. It doesn't happen. That's how we know. This is how you can have confidence looking at markets and saying, I know with a high degree of probability that that's going there. That's going there. Okay? So don't believe when people are telling you nobody can ever know. That's bullshit. That's because they don't know. But if you become chart literate, you can tell a lot of things. A lot of patterns start to make sense, right? You do not need to wait until it rains before putting your jacket on. You can watch the weather. You can look outside. You can look for clouds. There's a lot of things you could do, right? Same shit. All right, so that's the DXY. Do expect a move up, but that isn't a death knell for crypto or Bitcoin. That does, essentially, on that move, do expect a quick wick down in a lot of assets. So now what we're going to do with the time remaining in the live stream is what I said we were going to do. We're going to look for downsides because we're long. We're long as hell on this channel. We've been long for a long time, but we've got to be smart about being long. We have to protect against the downside. A great trader always protects against the counter, all right, and uses good risk management. You don't want to get chopped out. You don't want to be in the range of fire. And we know, based off of this Bitcoin chart, it's likely that we come back to this area right here, which represents, the B-wave retracement of this initial break of structure, right? Of the pivot. We think this is a pivot. Yeah. Let's look at the comments. Yo, what's up, Jason? Akanksha, what's up? Hello. Much respect. Guys, go follow Jason. Jason was killing it this morning. I was cracking my ass off. He timed this CPI almost perfectly, right? And it was so fun. It was hilarious. It's like the most entertainment of a live stream. My live stream is not that entertaining, to be honest. Jason's live stream is like a fucking party. That was fun. All right. So let's look. So we already protected our Bitcoin position. Now let's look up and down. And guys, remember, some of these assets we've been in for weeks. So they're well into profit, on high leverage. Some of them are up, hundreds of percent, thousands of percent. Wait, let's see. Nothing up 1,000% yet. Hundreds of percent. A lot of them are up hundreds of percent. Okay. So typically I'm not personally going to have to protect against any downside. But, I don't know. Some of you all may have been getting in a little later. So let's still look at the downside potential for these moves because you're very likely to get that move in the DXY to the upside. Very likely. Whoops, wrong chart. Where's DXY? There it is. Very likely. I mean, this looks like, let me just tell you what it looks like. It looks like a wave 4 complex correction. Is it complex? Yeah, it looks like a wave 4 WXY. That's what it looks like, right? This looks like wave 1, wave 2, wave 3, wave 4. Looks like you're going to put in wave 5, okay? And I bet if you took your Fibonacci extension tool for your purported wave 1, you get what you should expect. So wave 1, let's see. Okay, actually what you get here is some extension. Okay, so what do we know? Is wave 1, wave 2, wave 3 typically extends to between 1618 and 2 Fibonacci extension. You see that we've already hit the 2236. So being that wave 3 was slightly extended, don't expect for an extended wave 5. It's super rare. In Prechter and Frost 11th edition, he says that he doesn't say it's impossible that you can have 2 extensions in an Elliott wave, but it's highly unlikely. And I talked with Dan Dowd Trading, another Elliottian, really good Elliottian. Go follow him if you haven't, if you're really into Elliott waves. I talked to him about this, and I said, have you ever seen a double extension? He said 1, and I just wanted to know, and it was Ethereum. Ethereum, I thought put in a double extension, and he told me he also saw a double extension in Ethereum. And then we referenced the part in Prechter and Frost showing how it's not impossible, but it's improbable. So I think it's happened before, but it's so improbable that we can chalk it up to it's unlikely to happen. And you essentially put money on the fact that if you put in wave 1, wave 2, wave 3, wave 4, that wave 5 is going to come up, to, a regular size, a regular extension of maybe the 1618 of wave 4, inverse 1618 of wave 4, or wave 3, retracement of wave 4, 618 extension, okay, of wave 3, retracement of wave 4. So anyway, all I say that to mean, don't expect for wave 5 to just go on and on and on. Very likely that wave 5 come up here. That's all consistent with what we're seeing. But this is very likely a wave 4 correction. So given that, when that happens, and it looks like it's going to happen soon, maybe at some point today, maybe early tomorrow, do expect some pullbacks. And ADA is easy, okay? This is already in pure impulse. How do we know it's pure impulse? It looks like pure impulse. We can tell pure impulse. As Prechter and Frost say, right? And for those of you who don't know what I'm referring to when I say Prechter and Frost, these are the most authoritative Elliottians in existence, probably aside from Ralph Nelson Elliott himself. Bob Prechter and A.J. Frost wrote the wave principle. The wave principle. That's like the short name of the book, and it's a manual on Elliott wave theory, and it has 11 editions. If you're really serious about Elliott wave theory, I really suggest and I recommend that you read it and you're familiar with all the concepts detailed therein. But don't take everything as gospel. There are certain things, for instance, that Prechter and Frost say that I disagree with. For instance, A-B basing. They say that Ralph Nelson Elliott made a mistake when he proposed the existence of A-B basing, and that's basically what I made everything, like all my really profitable trades. My entire career is based off of A-B basing in Elliott wave theory. That's like my edge, because nobody even knows about it. People think it doesn't exist, right? And so when we get into those consolidation, everybody's like, I don't know, I have no clue. I'm like, oh, A-B basing. Elliott didn't expound on A-B basing. That's mostly my own research. But he floated it. He said there is such a thing as a sideways market. And those sideways market look like a collection of corrective patterns that go A, B. Like an A wave and a B wave, right? And so I call it A-B basing. So if you want to know more about A-B basing or see where Ralph Nelson Elliott mentions it in his own works, in his memoirs, I think it's in The Secret of the Universe. You can look in there. So Cardano, I think it's very simple. You just pull your Fibonacci retracement level. It's in pure impulse. And what I would do is I would measure from the bottom of this wave 2. Let's see. Yeah, I would measure from the bottom of this wave 2 and hide any stops behind the phi ratio. Okay, so this is easy, relatively speaking, right? I'm not saying trading is easy, but this particular protection against the downside is relatively easy. I would say that you look at this as a neckline, and you're probable you're likely, there we go, to retest the neckline as support, right? You broke resistance, you retest it as support, and that would be your wave 2 correction. Does that make sense? So that would be my way of protecting against any downside there if you're fresh into that trade. Yeah? And that's also like the way a lot of Ellioticians trade. They trade that first wave retrace, which is wave 2, right? After wave 2, then they wait for wave 3. And you'll know wave 2 because it'll take just as long as wave 1 to form, and it'll fall between the 0.5 and the 618, most likely, of wave 1. So anyway, yeah, I would just pull the fibs and hide everything below the phi ratio. Not financial advice, but that's what I would do. That's how I would protect against downside for Cardano. Moving on. Algorand. So, let's see. This to me, let's flip on our momentum indicator. This to me, it's a little tricky. Let's see. What I'm looking for is pure impulse. And pure impulse is not a base of, A, B, and then impulse. No, I'm looking for a pure impulsive move up, a 5-wave move up, where the retracement is going to respect that phi ratio of the prevailing 5-wave sequence, right? So that's what I'm looking for. I'm looking for a baseless move up. So let's actually go on a smaller time frame here. Okay, I'm not convinced that this is a pure impulse. So for Algorand as well, I would not be surprised if this were some type of A, B, C. Okay? And there's another way to measure these, okay? And this is also like guidelines that you can use. Typically, in a corrective sequence, if you take wave A, retracement of wave B, wave C will extend to between the 1 and the 1236 Fibonacci extension. Sometimes the 1618 in an extended C wave. Okay, and here we have wave C come to the 1618. I don't know. It doesn't tell me too much. Okay, in this case, this could very well be a wave 4 that we're in. We chop up a little here and then we continue up. Okay? That's possible. That's possible. Another reason everything's possible. That's probable. Another reason that's probable is because I see a neckline here. And that was broken up. And, just pattern analysis, I'm retesting support or resistance, broken resistance as support. So I wouldn't be shocked for this to be a zigzag, a 5-3-5, only because of that. So, okay, if I were trading Algorand, I would hide my stops below this neckline, significantly below this neckline. Yeah, I would take the Fibonacci retracement tool from here to there and probably hide it down here somewhere. But again, you're taking risks because it's going to be volatility, right? hard to say. Hard to say. I would pattern trade it. I would pattern trade it and probably wait. Wait for the retest of this broken resistance tested as support. That's how I would do it. I would wait. I know it's not easy and it's not like, oh, we know. But, you got to be comfortable about what you don't know. Sometimes you just don't know. And you got to be honest with yourself. I think that's also something. There was a point in my career where I was like, I don't know. That's like the most powerful thing I can say. When you don't know and you're comfortable with that and you're like okay with not knowing. That's actually really powerful. Saying you don't know. I don't know, but if I had to give my best guess, I would pattern trade this as an inverse head and shoulders with this neckline, breaking resistance, retesting it as support, and then I'd probably hide down here somewhere. But yeah. All right, that's Algorand. All right, protecting against downside because we're bullishly biased. Bonk, my favorite shit coin. I say that affectionately. I would. I feel like this is already ready. This is already ready. Meaning, I'm not expecting much more downside. I think this is going to be one of the first big pumpers. When we do get that move up. I'm actually seeing some sort of wave 4 correction. Okay? I'm seeing on a small time frame, really small time frame, 1, 2, 3, 4, 5. This is a really small market cap altcoin. Do not recommend trading this on leverage. Right? This is way too volatile. You can see just the volatility when you go on the small time frames, right? So if you're buying spot, I would close my eyes and buy, just zoom out, right? And I talked about this. I put a video up yesterday about why I'm bullish on Bonk, okay? And yeah, this is what I would do. Like, let me be honest. I'm not talking about protecting against downside with Bonk because it's so volatile and it's such a high risk, high reward type play. It's not a high risk, high reward, actually, in my eyes, because I buy it on spot, so it's very low risk for me. As long as you're buying support, you're good to go, right? Look, support, right? Can this support break down? Obviously, everything can happen. It's possible, but is it probable? That's what we're thinking. That's what we're looking at. That's what we, entertain as serious traders. Is it probable? Everything's possible. Is it probable? It's unlikely that this breakdown. It's likely that this support remains support as it's proven to for the past month. Okay? And that this is some series of AB basing, 2 degrees of AB basing, and a pivot. I do expect a move up here. I talked about this yesterday. There's a video why I'm bullish on Bonk. I basically just extrapolated a few minutes of my talking about it during the live stream. Dent. Okay, we kind of have the same thing, this same double bottom that we have in Bitcoin. Okay? On the high time frames, you see that nice double bottom, which shows you some double bottoming. You're still cross bullish. You have your bullish divergence. It's almost kind of like Bitcoin on the 4-hourly time frame. On the hourly time frame, looks like you're hovering. Not that much information. So on the smaller time frames, looking at what... Okay, I would not be surprised if this gave us a move down, kind of like what we see in Bitcoin, right? Not be surprised. I would not be surprised, right? I would not be surprised if this was our pivot. This was the A wave of our pivot, and this B wave comes back down to here. So just like Bitcoin for Dent, and again, this is just an educated opinion. I'm not saying that it's 100%, but if my bullish bias is on the high time frame is to go long and I'm really trying to go long, and I want to stay in this position. I do not want to get shaken out because the DXY is very likely to push for that wave 5. I'm going to hide my stops and liquidation points below the phi ratio, right? Because if this is an A wave, we know the B wave, if you measure it correctly, cannot retrace beyond the 1618 of the A wave. Okay, so that's where I'm going. That's what I'm going to do to protect against downside for dent. Obviously, I've personally been in this trade for a while, so I'm up a lot. But if I were just getting in on this level here, that's how I would play it. Okay, not financial advice. Do your own research, all that stuff. Does that even work? One day I'm going to talk to a lawyer and see if saying not financial advice actually keeps you from getting sued. But if any of y'all try to sue me, I'll fight back. All right, so don't try to do that. I'll hire some lawyers. I have money. I'll hire some lawyers. Let's see. Dodo. I'm also looking for that retrace. Do you see that? This is what, on the hourly time frame, our momentum indicator is telling us that it wants to come back down, okay? Now, we don't always go by the momentum indicators or any indicators because we understand indicators also have to be interpreted. But looking at the pure price action, I am seeing some semblance of an ABC, right? A three-wave move. And what do we know about three-wave moves? According to Elliott wave theory, they are corrective, right? So any three-wave move, expect retracements at the minimum to the 786 to maximum to the 1618, the phi ratio. So I would treat this the same way I'm treating Bitcoin. I would take this as my initial break of structure, what we're currently in as a B wave counter corrective move, and understand that the end wave or the end move or the final part of any corrective wave, A, B, C, W, X, Y, doesn't matter. The final bit is always impulsive. So that is why it comes quickly. And so whatever shape it takes, I would expect it to come down here. I wouldn't be surprised if it wicked below the range bottom. And we've talked about this before on the channel. Price tends to do that. Why? Price is like electricity. It's like water. It's always looking for the path of least resistance. It's always looking for more of itself. It's aggregative. It's like, oh, where's, the drop is looking for the ocean, yeah? So price is looking for more assets to get, right? More liquidity. So stops. So people think they're smarter than the average bear. They're like, I'm going long. I see green candles. And I'm going to put my stops. I see this range, well-defined range. This is the top. This is the bottom. I'm going to hide my stops down here. Okay, and they indiscriminately, keyword, indiscriminately, hide their stops below what they perceive to be the range bottom. Not understanding, right? A pro, a well-seasoned trader understands that there is a certain level, there's a certain gap below a range and above a range that's still fair game where you can wick above and wick below. So the pro is going to hide it even beyond that area, okay? That liquidity grab area, okay? We're talking order blocks for my FX traders. I know a lot of FX people, and studying trading, I studied everything. I studied order blocks. I studied how I watched and studied prop traders in the FX market, trading the 1 minute time frame, the 5 minute time frame. If you're serious about trading, my friends, study. You never know what skills you're going to gain. And at the end of your journey, or towards the end of your journey, or when you become profitable, when that happens, it's going to happen. I promise you it's going to happen. It seems like it's never going to happen. It seems like you're always losing. But one day you're going to be profitable. You're going to be consistent. And it's going to be like, oh, I took that from this, and I took that from that. It's like you're a superhero, and, you went to all of these different levels, and you beat all of these bosses, and from each boss, kind of like Mega Man, you acquire a new skill. And then, to fight a bigger boss, you take out that new skill. Do you see what I mean? Like, I don't trade FX. I'm not, especially, in the past, in this market climate, I'm not trading sideways. I'm swinging and position trading only right now, right? That's my plan. That's my overall plan. But I learned a lot from FX traders. I learned a lot from traditional market traders. I don't trade traditional markets, but everybody has something to teach. So be a student. Be a student. Learn, learn, learn. And who knows what skills you'll develop that can serve you in your personal, particular trading style. It's got to be yours because it's going to be based on your goals. Like, my goals aren't to make $1,000, $10,000. I can't do anything with that. That's great, but I need a lot more to fulfill my goals, and that's fine. Everybody's going to be different. Some people are going to be fine making $200 a day, $300, $400 a day, or $10,000, right? Like, I need more, and I'm okay delaying gratification, waiting. Yeah? I'm okay waiting for, okay, that is what I have certain numbers in mind that I'm like, okay, that was a successful trade. That was a successful trend trade. Yeah? So you got to do everything based off of your personal goals. Everybody's going to be different. Maybe your goal is just to hit 5 figures, 6 figures. And that's it. To make your salary for your 9 to 5. And that's it. And that's fine. Don't compare. It's your own happiness. And that's the beauty of this whole thing, It's got to be tailor-made to yourself. So, yeah, I would just do the same thing as I did with Bitcoin. I would just pull the fibs of this purported A wave, and I would guard against a drop to as low as this 1.618 phi ratio. Again, remember that when you're talking about specific pricing, it has to be it has to be exchange specific. So I'm using Binance charts generally in my analysis not because I trade on Binance. I'm an American. I operate in America. I can't operate with Binance. I can't use Binance. I use Phemex and KuCoin and stuff like that. But I use that because they have a lot of liquidity. Their charts look good. And if I ever wanted to look at volume, I can look at it reliably. But if I want more precise, specific, to the penny targets, I have to open up my own exchange, right? So, for instance, for my Bitcoin trade, I should probably do that. Let's see. So I'll just show you really quickly. So for my Bitcoin trade, it's on Phemex. This one is my disrespectfully long position. It's like as high leverage as you can go. I do that sometimes only if the opportunity presents itself. Like, I happen to be in a certain place, the price has to be in a certain place. I do my analysis and I'm like, I can go all the way here. It's not about the leverage, it's about, the risk. And so I put a little bit and I put it all the way. Let's see. So I would be looking at this inverse perpetual or linear perpetual. I always forget. Which one? Inverse perpetual. Oh, what am I doing? Of course, it's the spot trading pair because they got. No, it's this one. Linear perpetual right here. USDT. Yeah, that's right. Because the USD were closed recently. Okay, so and this is also something I learned. I know this is a small detail, but if you want to be really precise and you're dealing with high leverage, and it really makes a difference, if you get in at $1 versus another and where to set your stops, you want to use your own exchange as you want to do either go on the exchange site or use the chart on TradingView for that exchange. So here I would just pull the fibs, and I'm actually even better than I was. Yeah. I'm just beyond that phi ratio here for my stops and liquidations, right? That's just, it's similar to the Binance chart. Anyway, I hope that helps people because I had to figure that out. Sometimes I was like, earlier in my career, I would make a trade and I thought, oh, that should not have gotten stopped out. Why did that get stopped out? I'm looking at the price on the chart and I forgot that the chart is, or the price on this exchange is slightly, ever so slightly different than on the exchange I'm trading on, or on the exchange that I'm charting on, right? So I'm like, oh, I have to go into the actual exchange specific to the one that, what I'm trading in. Anyway, you guys get the point. We were on Dodo. No, we were on Dodo. Okay. Yeah, I wouldn't be surprised. Now, again, if this popped up and continued, then we're fine. We're golden. Whatever. We recognize that, okay, our read was wrong. But it's not about that. It's about worst case scenario, worst probabilistic case scenario, preparing for that, okay? I'm not saying that it has to come down, but it's likely to come down for all the reasons that I stated earlier, okay? Dodo. Here. Okay. Let's keep going. Dogecoin. Looking the same to me. This looks very, very AB basey. Do you understand? Obviously, it looks like the end of the AB base sequence, the entire sequence, but don't be surprised. And here you can see, what is this purple box? This purple box represents the bear market accumulation, right? On all of my charts, it's price spent 200 to 300 days going sideways, accumulating. So if I'm looking and I see 1, 2, 3 waves, it's likely that this is 1, 2, 3 waves retesting that massive resistance into support. Would not be shocked in the least. Okay? And this is the story that our trusty stochastic RSI indicators are telling us as well. So, would not be shocked or surprised to get that move. Again, a lot of people are going to be caught unawares with this. Trust me, a lot of people are going to be caught unawares. They're going to think, it's over, I knew it, it's dumping, right? That's what the bears are going to think. The bulls are going to be thinking, oh no, crap. I thought it was going up. And they're probably correct. But they may not have prepared for the retest for this last capitulative move down before the big move. Another thing I realized, okay, and this is all pulling off of my years of experience trading. Not that many years, but I've never done anything as intensively as I've traded in the past few years. Okay, even though it's only been a few years, like there's a lot of things in my life that I've done for longer periods of time, but there's nothing, I don't think, that I've ever done as intensively as I've learned and practiced trading. So, in that time, I've realized that any big move, like big pump, big move, is preceded by a big move in the opposite direction. There's always a necessity for volatility. It's unlikely. It's probably, I'm trying to think. It's very, very unlikely that you'll see low volatility and then a big move that is sustained. Very, very unlikely. Typically, low volatility, big move, big move. Do you understand? There's a reason for that. Because, like I said, the last wave of any corrective move is always impulsive. And if you're putting in a corrective pattern, just like Elliott wave teaches us, it comes in flavors of 3. So you usually get an A wave in the direction of the correction. A B wave, it's a counter. And then a C wave, which is the proper impulse, the direction of the impulse. So that's probably why. So always look for that downside risk. Always look and be prepared. Never get caught unawares by that volatility. Don't get shaken out. Don't be in the line of fire, right? Range trading 101. Never should any of your stops, even if you're day trading, you want to be careful of having any stops or liquidation points in the line of fire. You always want to be outside a standard deviation removed, okay? And that standard deviation would be the phi ratio of whatever initial breakup structure you measure. That is how you range trade, right? Probably the best range traders I know, Daniel of Chart Champions, Jason Casper, right? These kinds of people understand these concepts. You have to be very careful to be shaken out and not set your stops and your liquidation points in the line of fire, okay? And that goes for, if you're range trading or if you're entering either a position, short or long. So yeah, here you see this playing out in Ethereum. This is more and more clear the more assets we see. An A wave here, looks like we're going to get a B wave here before a move up. That's what our momentum is showing us. Yeah? A Litecoin, maybe a little different. Or is it? I would not be surprised with Litecoin. Let's see. Yeah, I wouldn't be surprised with Litecoin if you came just down back here. Okay? Litecoin has been a market leader. And many months ago, I was saying how very likely that in this bull run that we just started, that Litecoin was going to be leading the market. And why did I say that? Not because I have any particular affection or predilection for Litecoin. It's just because the high time frame weekly chart shows that the entire life cycle of Litecoin's trading has been in consolidation. That being said, when it actually does shift from consolidative to impulsive, it's going to move with a certain verve that nothing else moves with. So that's why I'm not surprised that Litecoin has been leading the market. And so on a smaller time frame, I'm also not surprised that this may be purely impulsive already for Litecoin. So I would not expect much of a major move. Like I said, I would expect it to come back down and retest this as support right here, right? This resistance that it just broke. Significant resistance, right? On this time frame, the hourly time frame, since February 9th. So that's many hours, right? Many hours. Lots of data to prove that this is a significant level. I do think that you're going to come down here again before moving up in Litecoin. But I don't see what we're seeing in Ethereum, in Bitcoin, where you have a three-wave move to the upside and you're going to get a major three-wave move to the downside. I just don't see that. And then let's zoom out for a second on Litecoin just to see if there's any significant support and resistance below that needs to be retested. Let's go for... And let's see. You see what? You see this? This is this level retested already multiple times. So you have two. Oops. You broke this resistance, you retested it as support. You broke this resistance, you retested it as support. I don't think this needs to be done again like this, okay? I just don't see that. I think we're good to go with Litecoin, okay? I could be wrong, but I think we're good to go. It looks like I'm using, I'm just processing the data to the best of my abilities. I just don't see that. This looks like pure impulse. Okay? That's what it looks like to me on Litecoin. I may be wrong, but that's yeah, that's my best take. I think on the even smaller time frame, I would not be surprised, if you even didn't get a retest of this level because you put in a leading diagonal that broke to the upside. That's how bullish this is. For me, this is a bull flag. This is a bull flag. You're flagging. So, entries on Litecoin are tough. They've been tough for months now because it's so bullish. You're always expecting more downside. But you know, that's just my take. Because of the high time frame bullish bias that the market has proven for many weeks in this asset, I would always, if I really wanted to enter, I would think in terms of a bullish asset and how, the minimum retracements should be done, and that's what I would enter with. Does that make sense? I don't know if I articulated that correctly. All right. Anyway, let's keep going. Let me put my phone down. I get distracted. RSR. Why am I on the 4 hourly time frame? Let's go back to the hourly. I like that. It could be a number of things here. I do see a range here. And looks like you're at the top of the range. Okay. You're at resistance. Sorry, I'm reading now. Let me read out loud since I'm on stream. Okay, I see A, B, break. Or. Let's see. A, B break? Something like that? I don't know. I'm not exactly sure. Here's what I see here. My best take is that this isn't coming down too much lower. Let's see. Yeah, I don't think so. I think what you're getting here is some sort of rising wedge that's likely to break up. Just based off of the potential count of corrective waves on the high time frame for AB basing, I think it's already done. Like, you put in your pivot, you put in your 2 degrees of AB basing. Also, I really like this as some sort of inverse head and shoulders. Lots of data here, lots of touch points. This is clearly resistance. We were under it. We broke it. Now we have to retest it as support. I think you come back down to retest this as support. Actually, yeah. 1, 2, 3, like that. I think that's done. Okay. So that would make this some sort of zigzag. So 5, 3, 5. Why isn't it purely impulsive, you ask? It's because this can't be purely impulsive by virtue of the fact that these 5 waves took 1, 2, 3 candles on the 15-minute time frame, and this intervening, wave 2, if you want to call it wave 2, took way longer. Okay. Yeah. I could see this as a leading diagonal for, continuation of wave 3, but again, support and resistance, everything comes back to basic support and resistance. You broke high time frame resistance, you got to retest it as support. You retest usually in flavors of 3. So I can expect and anticipate this to be 1, 2, 3. That's what I would trade as. And then I would hide my stops liquidations below all of this malarkey right here. I would hide down there. Not financial advice, but that's what I would be doing. If I were to get in on an RSR trade late. This is a tough one. This was a tough entry for me. I obviously I'm in this and up big, but it's very volatile and it was tough because all these, I've made like 20 different leverage entries during the bear market accumulation, and some of them took me like 2-3 tries to make, being stopped out, and just it sucked. I hated it, but we did it. We're here. Yeah. All right, let's keep going. Let's have a quick look at the DXY. What's the DXY doing? Yeah, you see the DXY is hanging out. If you're bearish on something and it's hanging out at resistance, you're about to get cooked. Okay? I know from experience, so many times, so many hours waiting. Oh, you're going to be rejected. Wait, why are you rejecting? If it's hanging out and kind of chilling on resistance, it's plotting, it's gaining, it's accumulating. It's not distributing, it's accumulating for a markup. I learned that the hard way so many times. I'm like, no, it's rejecting, it's gotta reject, that's resistance. Yeah, but resistance can get broken sometimes, and the way it gets broken is you hang out and accumulate at resistance. That's why I always say rejections at resistance are one thing. Accumulations at resistance are another thing. This is bearish. This is bullish. Resistance can be broken. It's not unbreakable. But it really depends how price approaches it. This is definitely going up. So yeah, we can expect that to translate into the crypto risk on assets market. All right, let's go back to our crypto. All right, that was RSR. Let's go back on the hourly. SHIB. I'm reading. Yeah, this is, I think, as easy as, well, not easy, but this is as straightforward as Bitcoin in terms of that B wave's coming the fuck back down. Like, this is 1, 2, 3. I'm expecting this to do something like this, okay? And that actually wouldn't be that out of the ordinary because this is a clear range, and this is, your initial break of structure, your secondary, or what am I saying? Let's zoom out for a second. Sorry. Okay, yeah, that's correct. Okay, I just needed to get my bearings. Yeah, this is your initial A wave. I think this is your B wave. That's your first degree, massive first degree of AB basing. Is your second degree this? Or is your second degree this? Are you putting in your second degree? I don't know. Again, there's that. I don't know. All I know is it's unlikely that this whole range of AB basing is finished. Either we're working on the second degree of AB basing, or we're working on the pivot. In either case, do expect a B wave to come back down for, do expect a B wave to come back down. So I would just, pull the phi ratio on that A wave and protect my position accordingly. Synthetics. Okay, we're at the median or the middle line of a range. And what do you guys know about middle lines of ranges? When you're above it, it's support. When you're below it, it's resistance. Looks like we are playing on the middle line. Okay, looks like we're playing on the middle line. We're going up and down, below and above. This, to me, the most recent move, looks to me like an A, B, C. Let me see. Yeah, okay, I got it. I think this is what's going on. I think this is my initial breakup structure. This is my counter for that initial breakup structure. So that's my first degree. I think my second degree is a zigzag. So it went 5, 3, 5. Okay? So that's my second degree of AB basing. Done. I think you're putting in your pivot right here, which is going to be your second degree was this A, B, okay, and then that resulting impulse up is basically the first leg of your pivot, and then the second leg of your pivot is obviously going to be a 3-wave move down. Okay, so it's another zigzag. So 2 zigzags in a row. It's a double zigzag. So I think 5 waves up, 3 waves down. I would protect my downside by hiding under this midline, or by pulling the phi ratio of those 5 waves up. So I'm just, if I'm in synthetics, and this, I remember trying to get this position. It took 2 tries, 3 tries, something like that, some weeks ago. It was tough. It wasn't easy. Yeah, I would hide it below the phi ratio of these 5 waves. I think that is very likely. Yeah. Well, thankfully, yeah, this position is one of those that's well into profit. And, as I said some weeks back, it's all downhill from here. Meaning, if you use the bear market as it should be used, and not talking about the impulse to the downside, but the bear market accumulation, as we know, every single time you go in impulse in one direction, before you switch that direction, you have to put in an intermediate processing, accumulation, or distribution, right? That is when you accumulate. That's why they call it accumulation channel. If you use that, appropriately, you're sitting pretty, right? And this is what we want to do to take advantage of these lifetime opportunities, once in a lifetime opportunity. I mean, the type of opportunities where you don't have to work, your family doesn't have to work, your kids don't have to work. That's the type of shit we're gonna see if you play it right. Not that I'm gonna stop trading. I enjoy trading. That's why I trade. But you're definitely not gonna see me taking as much risk with that kind of money, because I won't need to. Be a lot more conservative, protecting bags. And that's going to be the modus operandus. And, running my foundation, and, just hanging out with my son, doing whatever I want to do, freedom in all ways. Tron is another really strong asset, really bullish. We looked at this before on a really high time frame. Okay, why is Tron so bullish? Why is it typically leading the market? Okay, it's very clear. And again, without zooming all the way out and gaining a map of where you're at, right, and setting up your charts appropriately with the log scale and all that stuff, you're kind of clueless as to why things are happening, right? Tron? Why is Tron pumping? It's a shitcoin. Justin Sun is a fraud. Blah, 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 blah. Nobody uses Tron. Blah. All these narratives. You leave it for people to discuss. You know? It's not a serious trader. You know? We don't make money like that. We make money by looking at the data that's presented to us on the chart. And looking at this on a high time frame, you can see that for 600 days, you've been bullishly accumulating. This is a massive, the biggest that I've ever seen, the biggest bull flag that I've ever seen. So this goes back to what I was saying in the beginning of the stream. This is why these are once in a lifetime opportunities. When else are you going to see this? Maybe in another decade. I don't know. But again, this consolidation took about 600 days, okay? So 600 days worth of going sideways and down so that you can enjoy a massive pump, the likes of which you have never seen. I remember Tron in 2017 it was, when I first entered crypto. I had no idea what I was doing. I had no idea of anything, not trading, not a chart. I don't even know if TradingView existed. I remember I was buying Bitcoin and selling it into altcoins. I remember my first purchases were Litecoin, Tron, XRP, and Ethereum, I think. I don't know. Litecoin, Tron, XRP, not Ethereum. Maybe Litecoin, Tron, XRP, or something like that. Like, I just bought things that I thought sounded cool. And my brother said we're cool, and he was watching this YouTube channel called Bitcoin Benny, and Bitcoin Benny said these were buys. So I just bought it. And you know what I did after that? I forgot it. I put it on a ledger, and I went about my life, and I don't even know what happened, you know? I just know, like, I was dealing with my son was 1 at the time, so I had other things to do. And things went up. I didn't know, I didn't care, I didn't even look at it. It's not until 2019 I got back in the market, and I was like, ooh, wait, stuff went up, but then they went back down, okay? Because I think I bought towards the end of 2017, or I don't even remember. In any case, these are once-in-a-lifetime opportunities because, as you can see, you spent years consolidating. And as Wyckoff, really, I love his description of markets, right? Obviously, I'm an Elliotician. I use Elliott Wave. I think Elliott Wave is super powerful. But I encourage, if you're serious about markets, if you're serious about trading, study these different styles. You might acquire skills, concepts, things that you may be using in your day-to-day trading activities to build your to gain an edge. You don't have to like use it, but you just understand the concepts. It may level you up. You know what I mean? Wyckoff always says everything is cause and effect. This is the cause, that's the effect. You don't have to know what happens in a market. You can't know, but with a high degree of probability, you do. With a high degree of probability, you can prognosticate, you can speculate based off of the cause. Cause, effect. Cause is accumulation, effect is markup of said accumulation, right? This is a bull flag. So, high time frame analysis shows you that this is extremely bullish. Why? Because it broke that 600-day accumulation back in early January. Okay, so you should expect it to be above all its EMAs. You should expect it to be running fast and free, which Tron is. Okay, so going back on the small time frames, we have a little bit of perspective on this price action. And now we know why, of all the assets that dumped, this one dumped and recovered one of the fastest, right? It was in this rising wedge. It broke the rising wedge, and, you know, this was very clearly a 1, 2, 3, 1, 2, 3, some complex correction, a flavor of 3, as we call it, and then a 5-wave sequence to the downside. And accumulation or consolidation, this is the processing of this dump right here. And now the impulse resumes. That is the impulse resuming right there. So the high time frame analysis informs your small time frame analysis, which tells you if you want to enter Tron, don't expect any major pullbacks. Do you see how you do that? Your hourly, 4-hourly, daily time frame even may not tell you that. Even with all of these indicators, you can even turn on your EMAs. If you're keen on reading EMAs, maybe you can read that. You'll see that this is consistently, I use the 89 as well, Fibonacci numbers, 89, 21, 55, 144, okay? But again, I'm at a stage in my career, I don't have to turn on my EMAs to make sense of a chart. I used to have them, or else I felt inadequate. I felt inadequate taking a trade without them, you know? And then I took the training wheels off. Not to say that they're bad, but this is just underlining, yes, emphasizing my point. High time frame, it's really bullish. It broke that 600-day resistance, right? Retested it as support. It's been done, right? It's all been done right here. So you should expect Tron to keep going. It's just unimpeded growth right now, and it's above all of its EMAs on the 4-hourly, on the daily. I mean, come on, look at this. Look at this. You're talking about golden crosses and stuff like that. I mean, these are EMAs, not simple moving averages, but it doesn't matter. The idea is the same. Your fast EMA, or your small time frame EMA, right? The fastest EMA is the smallest time frame EMA, exponential moving average, right? Basically, if you understand what EMAs are and moving averages are, you take price and you average based off of past data, previous data, you extrapolate into the future. Right? So the computer basically takes all of the past data, and let's say I'm on the 21, the 21 period exponential moving average. Basically, using the mathematical formula, I'm going to take the price of this asset every single 21 days and average it out, and this is the average price. And the price being above the EMA is essentially, you're above the average of the price that this should be, given me taking all of the past information, the historical information, every 21 days. Does that make sense? I didn't understand that, right? Earlier in my career, the EMAs were using me. The indicators were using me. I was just told EMAs are helpful. This is how you read them. When shit's above them, that's what it means. When they cross, that's what it means. When it's below them, that's what it means. I didn't really understand and grasp the concept, okay? But when you really understand what an EMA is, it doesn't matter so much if you're using the exponential or the simple and what period you're using. You can really understand what they mean. And so you shouldn't be surprised to look at Tron on a high time frame, on a small time frame, and it's consistently above all of its EMAs. Yes, and it will continue to be so. You can expect massive moves for Tron, okay? We've been saying that. Not because, we have a crystal ball, because it broke significant resistance, 600 days. People still want downside, okay? Weekly time frame, it's even above its weekly EMAs. You can't make this shit up. Guys, do you see what I mean? And this stuff is not that hard. I know trading can be a little difficult, but we're talking about charting here, not trading. Charting, generally speaking, is pretty straightforward, right? High time frame resistance, broken, retested, you're good. High time frame resistance, or support, broken, retested, you're bad. That's it. It's that simple, okay? So let's go back to the hourly time frame. That to say, don't expect any massive retracements in Tron. I wouldn't. If I want to get in on this, I'm going to make attempts to get in sooner than later, assuming, let's turn off the EMAs. We don't need them, and they make things messy. I'm going to go in sooner than later, and I'm going to assume that this uptrend is going to continue. Do you understand? The assumption is informed. The assumption is not out of nothing. The assumption is based off of high time frame analysis, right? The high time frame analysis, once more, informs the lower time frame analysis. You formulate a thesis, and then your bias is resting on that high time frame thesis, and you're giving yourself basically a higher likelihood of being correct. You see how that works? You're not in the dark. You have a map. Your map tells you, generally speaking, the church is that way. Generally speaking, the schoolhouse is that way. Generally speaking, the recreation center is that way. So go in those directions. Generally speaking, put your wipers on when it rains. That's pretty much it. Maybe you don't have turn by turn directions, but you have something, right? So that's Tron. I'm not focused so much on downside. Obviously, you always want to be focused on downside, but essentially for this, like I said, I would just look at this as an impulse, and the way you enter any impulse in Elliott Wave is you pull out your Fibonacci retracement tool, you go from the bottom to the top. If it's pure impulse, okay, bottom to the top, hide behind the phi ratio. That's all I would do to protect against downside risk for Tron. This is particularly bullish, okay? In my estimation, obviously. Okay, XRP. This just looks like an A wave to me, okay? This looks like an A wave to me, so I'm going to treat this like Bitcoin. I like this read right here, okay? I think you come back down and retest that midline right here. I don't see why not. I really don't. Let's see. This is when I re-entered recently, so I'm gonna check my invalidation. I've re-entered it. Like sometimes I'll take profit, only to get back in. Oh no, I had to I made this position bigger because I don't know. I wanted to make it bigger, so I took profit and I just entered it anew. So I increased my leverage. That's why. But yeah, that's what I would do there. Let me also see. Let me see something. If this is an A wave. Okay, I want to, so I'm going to do this right now on stream. I'm going to, you have to watch for anything in this region. Okay, so I want to hide behind here, and I'm slightly above it, so I'm going to add to my margin. This is protecting against downside risk, my friends. So yeah, I'm going to do that right now. I'm going to do that right now. Let me do that right now. Okay. And okay. Okay. Here we go. Okay. Done. Actually, let me add a little more. But yeah, this is what I do. Like, I'm not trading every day. I'm protecting against downside risk because I'm planning for, I'm trading a trend. So I'm essentially just managing positions, managing margins, managing fees, protecting against downside risks, letting it ride, not taking profit too early. That's essentially my strategy right now. Just here we go. Okay, hold up. Let's do this one more time. I'm gonna add a little more. Okay, here we go. Trying to do this. I'm trying to manipulate the slider on Femex. I trade on my phone. I don't trade on computers. I've always traded on my phone. So yeah, sometimes it's hard to manipulate, but I prefer it that way. I'm so much more comfortable trading on my phone than I am trading on a computer. So, okay, here we go. Let me transfer that. I'm just moving capital around. Yeah, but yeah, for people wondering if I trade every day, I do not. I manage positions daily though, just looking at them, making sure everything's okay, right? You know, you can get shaken out of position even if you're green. If your fees exceed or equal your margin. You know, there's so many things that you can, like, they'll automatically close the position on you, even though you could be up thousands of %. It's happened to me, and I'm like, oh no, you know, I didn't know. So all that stuff is stuff you have to learn. I think for trading and charting, two different things. I learned that the hard way. I thought, you know, if I chart well and I can read the markets, I can trade well. It's not true. There's a whole different skill set that's complementary to charting, but it is a whole different skill set, trading, right? Knowledge of your trading platform, knowledge of, you know, how these fees are calculated, and, you know, how to, you know, modulate your margins, how to calculate your liquidation points if it's not automatically capped, all that stuff. You gotta be very comfortable with your platform, your trading exchange. And, you know, it's a big deal because if you're trading 6 figures, 7 figures, 5 figures, it's a big deal. You got to know exactly what you're doing. All right, this is a lot better. Okay, here we go. I'm comfortable with that. Okay. Downside risk is, you know, in my estimation, protected on this one. Okay. So. Okay, Zilliqa, I'm seeing the same thing. I'm seeing this as a potential B wave. Sorry, 1 second. I just need to zoom out on here. Yeah, I can see that happening. You know what? This is gonna be a relatively strong move down. Likely. And you know why? Because, okay, let's not assume that. Let's zoom out even more. Okay, let's not assume that this is... Okay, it's likely. Okay, look at how, and this is again how high time frame analysis informs the smaller time frame analysis. So I drew this channel, okay, and this channel is not drawing willy-nilly. Obviously, you're using data to build resistance and then build support. Here's my one data point, this on the daily time frame, and mind you, this is about 600 days worth of data, yeah? Something like that. Yeah, 637 days. So, large data set, lots of different data points. 1 data point, 2 data points, 3, 4, 5, 6, 7, many data points, okay? So, it's a reliable level of support and resistance. Zooming back in, we can trust it based off of the fact that our chart's properly set up on the log scale, faithfully representing parabolic price action, right? If it's not, look what happens. Do you see what I mean? I promise you there are people out there that are doing technical analysis that are big accounts, large followings, millions of subscribers. This is how they set their high time frame charts up. I don't know how you work with something like this. I don't know what you take from this, how you can even look at this, but that is a thing. If you don't do your own research and understand how to use a log scale, do a TradingView tutorial, learn how to use TradingView and how to set up a chart, that's on you. That's not on them, it's on you. Okay? Set up your charts properly. Once you set up your charts properly, you measure your, you pretty much play with shapes, just like a kid would. Look at your support and resistances, high time frame, and now work with that. So on the smaller time frames, I know in Zilliqa that is highly likely, okay, highly probable that this level right here, right here, that has been broken to the upside should be retested. It's highly likely. I don't know anything 100%, but it's very probable, okay? And the way I prepare for that is by hiding my liquidation point significantly below, okay? And we can get even more specific in a second, but let's look where I'm at. Okay, I'm good. This is one of those positions that I had trouble entering, but I finally did, okay? And I entered way down here. Got chopped out a couple times. I remember Zilliqa being a bitch. I remember that. Very volatile, but it's up a good amount. And, our liquidation points, we don't have to worry about it, thankfully. But do not be surprised if this is a three-wave move. This is a bunch of consolidation in a complex B wave, right? Remember, B waves are flavors of three. Here's what I see just off the bat. I see this as being a contiguous flat correction. I see this being I'm basically working backwards. That's how I learned to do this most. When I read complex corrections, I work backwards because I've found in my experience that is the best way to do it, to make sense of it, right? To see the patterns. So you just work from whatever you see first, whatever jumps at you first, and then you work around that. You work inside out if you have to. So like I said, this is a contiguous flat correction, and I think these are two wings, and all said and done, this is my initial break of structure, or no, this is a complex correction. So my initial break of structure is called W, right? And this is an X wave automatically. This is an X wave. Do you see that? The X wave is composed of this flat correction here, and then this. But all in all, why do we say flavors of three? Because of these complex corrections. And this is your flavor of three. 1, 2, 3. Does that make sense? I hope that helps. I know complex corrections are tough to read, but with a lot of practice, you see the simplicity in the complexity. And it's not complicated, it's complex. Okay, so we do expect a Y. Every corrective wave, every corrective sequence, ABC, WXY, ABCDE, right, triangle, everyone ends impulsively. So we are expecting Y. We are expecting a move down. Do not be surprised if that move down comes down here, because that is a support or a resistance that was broken, a 600-day resistance broken, that should be duly tested as support, because that is a principle of technical analysis. It's basic resistance, support, support, resistance, flipping, okay? And that would make sense. Yeah, I think that's a likely move, right? From where we're at, that's a big move down. That's a 20% move down. Wouldn't be surprised. Wouldn't be surprised if you got that. Okay? So do watch out for that. is let's go on a smaller time frame. Is it 100%? Nothing's 100%, but don't be surprised if that happens. Don't be surprised if that happens. Now, another thing I should say about this is it possible that we've already retested this resistance as support over here? It's possible, but I think it's unlikely because it's not a clean retest. Usually these high time frame retests are so clean, you see them, boom, they're retested and then they initiate a new trend. So that's why I do think that that move in Zilliqa, maybe 20% to the downside, is more likely than not. Yeah. And that here's what I'm reading more specifically. What you're seeing here is more likely than not a zigzag. Okay, again, a zigzag is a 5-3-5 move. It's a corrective pattern in LA wave theory, right? It's in 3 waves. So you have 5 waves initiated to initiate it. So that would be an A wave. Your B wave is a retracement in a flavor of 3, retracing to a minimum of the 0.5 Fibonacci retracement to a maximum of the 0.618 Fibonacci retracement of those 5 prevailing waves, right? 5, 3, and now you get your 5 waves, okay? You can typically measure that C wave of any ABC retracement or of any ABC corrective pattern by taking the A wave, retracement of the B wave, and projecting to between the 1 and the 1236, okay? But again, remember, the 1618 is for an extension, but that's also on the table, and look where the 1618 falls. Don't be surprised if you get that. 1, 2, 3, 4, 5. Okay? Look out for that. Again, I wouldn't trade for the downside because the downside is going to be so quick, and then the resulting upside, which is the capitulation or the completion, the conclusion of the entire consolidation, is going to be even quicker. It's not worth it. It's not worth it. The big brain 200 IQ move is to prepare for the downside and to go up, right? At the end of the day, we want to make money. Yes, you can make money on the way down, but the risk is so high. Why would you avail yourself to that amount of risk for such little reward, right? At most, you're getting 20% to the downside, whereas the upside potential is so much more. It's magnitudes. The 20% that you can get to the downside. So that's just like how I'm looking at this. That's what I would do. Again, preparing for the downside, but not trading the downside because the upside's much more. You're basically using the downside to enter your position if you haven't entered your position, or just waiting it out for the trending move. Yeah, it's all about the trending move. Counter trends are cool, and there's a lot of good counter traders out there, counter trend traders out there, but understand the risks involved with counter trend trading. V-Chain, I'm seeing something similar here. Okay, you have a rising wedge. Okay, and again, this is all basic, basic charting. Rising wedges tend to break down. Okay, anytime something breaks down, what does it do? It loses support. Okay, you have, let's just extend this. Let's not be lazy. Okay, here you can see it. Boom. You see that? So this is a 4-hourly time frame. This is a serious, reputable, relatively reliable trend line, right? You don't just draw any lines on charts. You make sure that your chart's properly set up. You're set up with the log scale, right? Using crypto, just default to the log scale, because When your chart is on a small time frame, it's going to automatically adjust, right? You're just going to project the linear sort of scales adequately. The log scale is dynamic. So when you zoom out and when you're going high time frame, it's also going to dynamically adjust. So when in doubt, that's why you always see my log scale on. I'm a crypto trader. It's kind of dereliction of duty if I'm on the arithmetic linear scale. Crypto traders should default to the logarithmic scale. Anyway, my chart set up correctly. I understand all that stuff, and I see that this is a serious trend line that has data spanning at least a month, almost a month, okay? And a few data points. You have 1, 2, 3, 4, 5. Okay, so this is a serious trend line. I lost support right here, okay? If you're a short trader, this is the perfect entry. Stuff like this, right? Because what happens when you lose support? You retest the lost support. If it's significant lost support, you retest it as resistance. That's exactly what you're seeing here, right? Support lost, retested as resistance, then the breakout. That's the breakout trade right there, okay? So don't be surprised, once again, for these downwards moves. And again, I'm seeing here that this, using our skills in Elliott Wave, is 1, 2, 3. Shit. Sorry, 1 second. I saw it. Okay, here it is. A, B, C. That's a 3-wave move. Do you see that? That's a 3-wave move. This is a zigzag. 5 waves down, 3 waves up, 5 waves down. Again, the projection for any C wave of an ABC zigzag or an ABC flat is between the 1 and the 1, 2, 3, 6. But don't be surprised for zigzags especially to achieve or to attain that 1, 6, 1, 8 and even sometimes a little bit beyond. So is there a point of interest anywhere near a target? Yes, this midline, which is significant support and resistance, right? We know midlines are significant support and resistance. We broke it to the upside. Now, this would be nice to retest it as support. Won't be surprised if VeChain comes all the way down to this area. And again, that would be a 20 some odd % move. A lot of these altcoins can go down 20%, okay? So I'm personally, once again, going to check. I got on this exchange like 20 some odd positions. Can I survive that? Right? That's important. And it seems like I can. Let's see. I just might be able to. Yes. Yeah, it just might be able to. So I'm gonna add a little bit, just in case. And I know a lot of people are probably thinking, like, dude, just take profit. Yeah, I could, but I have a lot of positions. So for me to take profit would mean I'm gonna have to enter a whole gang of positions in a volatile market. I probably won't be able to, right? Things will move so fast on the way down and back up, most people won't be able to catch these trends. And remember, if you haven't been in crypto long, remember what happens in bull runs when you get big moves to the upside, when you get big volatility. Quite literally, the exchange shuts down. Sometimes you can't even get in and make a move, right? So remember all of that. You're assuming that there even be liquidity for you to, go long or to buy. Sometimes there's no liquidity and you press the buy button and nothing happens. So all of these things have to be taken into account. And from experience, just, dealing in bull markets, like you probably know, or if you don't, it's tough to make trades as it's happening. You kind of have to prepare beforehand. So that's what I'm doing now. So yeah, let me add to that a little bit, just a little bit. So again, protecting against downside risk here. And I'm going to add a little to my VET margin. A little bit. So here we go. Okay. All right. All right. I'm gonna add a little more even. So this is the work, guys. This is the work. This is what we do. You gotta be like, you got a lot of positions. You gotta manage all the positions. The more positions you have, the more positions to manage. It's not the easiest thing in the world, but it does pay off. It definitely does pay off. Especially if you're a position trader or swing trader and you're not taking profit, at, regular intervals, you have to do all of this or else you can get caught unawares, right? You always know that retracements are possible. You gotta protect and guard against retracement levels. Okay, let me do this. Let me add a little more, just a little more. Okay. Okay, down here. Let's see. Yeah, I want even more. Okay. Alright, I'm gonna sort this out a little later after stream. Alright. But so far, I think I'm at least better than I was. Okay. Theta token. I'm seeing the same thing, guys. Do you see this? Rising wedges, likely to break down, likely to retest. Yeah, see, this looks to me like a 535 again. Right? Not a rejection, right? Because you are at resistance here. Right, you're at resistance, but you're consolidating at resistance. I think here you get not as large of a move, but you do get some move like this. Okay, and here I think the move is let's go back actually. Something just came to me. You let's see. You want to, obviously, I think you hide behind your phi ratios, as usual, right? You just use your phi ratios to hide. And in that case, let's say this was... Yep, do you see that? You have confluence here. If this is your impulse, right, and this is your start, your retracement, so you put in wave 1, wave 2, wave 3, wave 4, and then you put in an ending diagonal, 3, 3, 3, 3, 3? No, sorry. No, it's... Yeah, it's 3, 3, 3, 3, 3. I think that's the end of it right there. Okay, so it's an A, B, and then C, but that C wave is a zigzag. 5, 3, 5. Okay, I think that's what you got right there. Okay, and again, you can see, I think, quite clearly at least using VeChain, what do you see? This is quite clear. Look at that. All the way up here. You have resistance, or yeah, resistance that was broken. You want to change it, or do you want to turn it into support? All the way up here. Okay? So I think this is very likely to come back down all the way here. Okay? And then obviously you want to hide behind your phi ratio, but you can come down all the way here, and that's confluent with the midline here. So it's such a good read. It's such a good read, I think. It's such a good read. Okay, so I think that's what I would do. That's how I would protect against downside. It is going to be significant here, right? Because that move, sorry, let me undo all of this. But yeah, I'm seeing 5 waves up and 3 waves down, and the time it's taken to go 5 waves up, right? 1, 2, 3, 4, 5 is about the same time it's taken to go 3 waves down. 1, 2, 3. Do you see that? Our principles of waves of the same degree, or at least our guidelines, waves of the same degree are comparable in time and in price, really inform us of what's going on and how it's happening. So here we go. Took about 21 days and 16 hours to go up. And it took, thus far, about 18 days and 8 hours thus far to come down. Waves of the same degree are comparable in time and in price. And again, just basic, not even talking Elliott wave, just basic support and resistance. You lose support, you retest it as resistance, and then you start down. Okay? So, that's what I'm seeing. Theta, I'm seeing something similar. I'm seeing something similar. I'm seeing something similar. And what our momentum indicators are telling us the same thing, right? Resistance, you broke resistance, or you broke support, you're retesting it as resistance in a corrective move, right? A 3-wave corrective move. 1, 2, 3, and then it's likely you're coming back down. Okay, so I am expecting some big moves with some of these assets. Some big moves, right? Because you've put in 5 waves up, and you're basically distributed here, and you're finishing this distribution, and it's likely that retracement, that wave 2 retracement, which probably starts here in this case, right at that midline, and it goes all the way, let's see, 1, 2, 3, 4, 5, A, B, yep, that's how I'm reading it. I'm seeing that right here. 1, 2, 3, 4, 5. Okay. Is that right? I think that's right. Let's see. Let's measure. It is about 17 days, 18 hours on the way up, and about 22 days on the way down. Okay, or maybe this is 5 right here. This is the top of 5 right there. Okay. Anyway, This is still likely, if that's a top of 5, let's just change our retracement level. Okay. And again, it's very, very similar to what we just saw. Don't be surprised to come down to these levels. Okay? You put in an inverse head and shoulders here. You broke the neckline up. You come down, retest it as support. Then you're on your merry way. Okay? The same thing as VET for theta. Don't be surprised to get those moves, in this case, before you go up again, come down, 13, 17%. But yeah, I would protect against downside risk here. Okay, moving on. Telcoin. What are you doing? What are you doing? What are you doing? This is one that I am doing on spot. But again, you're consolidating at resistance, which is bullish. I don't know that... trying to make sense of this. Sorry, 1 second. It looks like you're on support, doesn't it? You're almost on support, yeah? You're almost on support. Okay, again, we set up our charts. We draw lines on our charts, but our lines mean something because our charts are properly set up, and we look for high time frame trends, right? On the 4-hourly time frame, we're taking a trend as far back as October with multiple data points, data. Very likely that you have a short move down back to this support level for Telcoin. Okay, not as big as the other examples that we just gave, like VET and theta. Matic. Don't be surprised if this one keeps going up. Don't be surprised. I'm seeing pure impulse here. What do I mean by that? I mean 5 waves up and 3 waves down, right? You can see that here. I think you could see that even all the way down here. 5 waves up, 3 waves down. 5 waves up, 3 waves down. Expect it to continue. I don't see it stopping anytime soon. This does look distributive though. Let's see. This looks like an ending diagonal. It does. It does look like an ending diagonal. Okay. Here's what. Instead of reading the Elliott waves, let's go back to our trusty support and resistance read. What do you see here? A rising wedge, or a rising channel, whatever you want to call it, breaking down, and then retesting the bottom support as resistance in a 3-wave move. So this is a flat correction. Okay, why do we know it's a flat correction? It's because it goes 1, 2, 3, 1, 2, 3. Expect a 5-wave move down like that. Okay, so that's not a major one. It's going to be, we can actually measure it, right? Flat corrections, we can take wave A, wave B, and then project wave C to be between 1 and 1, 2, 3, 6. So just in this area, okay? So I would not be surprised if we got some 10%, 12% move from Matic down to 107, 102-ish max. Okay. Yeah, I'm way. I'm comfortable in my position. Very comfortable in my position. Okay, let's keep going. But guys, just because we see some small time frame downside risk, and it's likely that we go to the downside on the small time frames, you should still have a high time frame thesis. And the high time frame thesis may play out quickly. Not like Bitcoin's going to go up one day. You know what I mean? That's not what I'm talking about. If you've been watching the stream, you understand what I mean by that. Okay. DYDX. Okay, I'm seeing this come down to this level here. Let's see. This is resistance. And okay, so here, this is relatively simple, and I'll show you why it's relatively simple. You have, let's get rid of the momentum indicator. You have a relatively straightforward channel that's well respected, you know, for 300 some odd days. You're going up and down and up and down and up and down, and it's well respected in that the support is regular and the resistance is regular. Okay, so it's not that confusing. Now, if you're channel trading, you know that it's imperative that in order to overcome or to vanquish a channel, you must go and retest resistance as support. That wasn't done here, okay? You broke resistance and you failed to retest it as support, and you actually broke back into the channel. What's your next main support? The midline, which serves as support when you're above it, resistance when you're below it. Don't be surprised if DYDX comes all the way back down to 170 to retest that midline. Okay, so that's what I'm seeing on DYDX. I'm going to check my position, and I'm not bad, but I could do better. I'm thinking. All right, here's what else you can do. Okay, this has clearly been pure impulse. Okay, if this is pure impulse, one thing you can do is take your Fibonacci retracement tool, run it from the bottom to the top, and you basically look and see what you're dealing with. And it looks to me like this is a very nice zigzag. Okay, A, B, 1, 2, 3, 4, 5. So I won't be surprised. I basically, if I'm in DYDX, which I am, I'm going to hide behind the 0618. So that's what I'm going to do. Simply. Quite simply. Okay. I'm going to hide behind the 1618, or the 0618, and that's all she wrote. Because this is likely to come down. It's been in a downtrend, but it's likely to come down a little more to this level right here. Okay? And that gives us 5 waves up, 3 waves down. And I think I'm reading that properly. 1 second. Hold up. I think I pulled the... Okay, I think the Fibonacci retracement levels are pulled a little too low. I think what happened here is this pivot. Whoops, that's not what I wanted to do. This is a pivot, A, B, right here. and then this C wave is pure impulse. So I actually want to pull the pivot like this. So I think you hide it behind the phi ratio, which is up here. Okay, so that changes. Yeah. So yeah, I think that's it. That's what you're expecting in terms of downside, right? And I think you have some time to get in positions actually here, because you're dealing with A, B, 1, 2, 3, 4, 5, a quick wick, a small a consolidation accumulation, right? Maybe it's impulsive, but you'll have a little time. If you're paying attention, you'll have a little time. But that phi ratio is where I would hide my stops and liquidation points behind. I hope this is making sense. But yeah, that's how I would read that one. That's how I would read that one. Harmony 1, same deal, except I think you are out of the woods in terms of having to worry about breaking back down beneath here. Because if you look at this channel, you know that you've already retested that top as support. Okay? Obviously, you can retest it, but it's already been retested quite substantially. And you put in a rounded bottom on the smaller time frames here. So I think it's safe to look at Harmony 1 as being in pure impulse, which I believe it is, and starting your count down here. And I would just take this. Again, who's to say that you won't keep going up? But again, you're looking at a break of the channel, a retest of that lost support as resistance, and perhaps you continue to the downside. Okay, perhaps this may continue to the upside, but if you want to protect against downside risk, you hide behind the phi ratio, which would be around this area, 14, something like that. So that's for Harmony 1, about 1380 maybe. Yeah, this one's tough. Might want to add to this. I'm thinking what to do. Because okay, this may break up. This is the wild, wild west, because not everything's gonna do what everything else does, right? Going into a bull market, some things are just gonna go. They're gonna continue to go, and they're going to retrace on their own time. So the question is, like, where are we at? Here, I'm not exactly sure. It's not such a strong case for we're coming back down all the way here. You know what I mean? So I'm going to see what our indicators are saying. And so this indicator right here on the 4-hourly time frame saying we're going up a little more, actually. I wouldn't concern myself so much with this downside move. That's what the indicator is telling me right there on Harmony 1. At least on the 4-hourly time frame. The hourly time frame looks like I'm coming down a little bit, but again, on a small time frame in a trend, you can stay overbought or oversold. But the 4-hourly time frame is telling. The fact that it's still kind of there and hanging out. You may be dealing with some intrawave retracement that's just going to continue up, you know? This may be all she wrote in terms of an intrawave correction right here. It's tricky. That's tricky. That's tricky. Yeah, let's look at this on the daily. Do we have any data? Yeah, the daily time frame is very convincing for us being at support and moving up from here. It's very convincing. Yeah, I don't know. This one's a tougher one. But okay, gun to my head, I would say this one is more likely than not going up. Okay, more likely than not continuing to go up. And I understand we're in crypto and, you know, things go as Bitcoin go. And generally speaking, yes, that's true. But I just don't see any important downside moves from here. Yeah. Yeah. Let's see. Okay. I'm just gonna see what would this be like. Yeah, I'm not seeing it. At the worst, I see this going down here somewhere, but not more than that. You know, and these would be zigzags, but I just don't see it so much for harmony. But I don't know. Okay, strong proclamation. I don't know. I'm not that sure. Very good, very nice, very empowering. It helps you. It gives more answers. Because if you know and you know, there's no room. But sometimes you don't know, and that makes room for discovery. I love it. I really need to go pee, guys. I'm just going to go pee, and I'll be right back. We're almost done. Just a few more. But I don't want to rush through them, so I'm going to go to the bathroom. I'll be right back. Okay, we're back. Okay, looking at MOVR Moon River, that's pure impulse to me, okay? That's pure impulse to me. That's not a corrective wave. This is very nice. Another thing that I really like about this, that it seems like you're done with this accumulation range right here is that you've broken above resistance and you retested it as support. That's, remember when I was saying that when you retest important support or resistance as support, you typically see it and it shows, you put in strong candles of that's done, you know, and you bounce off of it like that. So I think that that's all she wrote from here for Moon River. I would be surprised if you had any more downwards moves from there. And if you measure the move up, took about 20 days, 21 days, took about 21 days, and then you measure the move down, the 3-wave move down, the correction, took about 20 days, almost 20 days. So I like this as complete, okay? And the other thing is, obviously, you want to look at your proportion in terms of price, and you take your Fibonacci retracement level, and what you see that this is really bullish. Why do we know that this is really bullish? Because that retracement is a minimal retracement. So it's likely that what you're seeing here actually is either it's a wave 2, but it's unlikely a wave 2. This is a wave 4, more likely than not. It's a type of wave 4. It's an intra-corrective wave that's retraced to the minimum 382. So you know that, you know, it can be a wave 2. It's an unorthodox wave 2 if it's a wave 2, but it can be a wave 2 for continuation to the upside. But for MOVR, I'm not expecting much downside. And let's see, our momentum is kind of exhausted, but look at that on the small time frames. Look at that. You see that? If that momentum is exhausted on the small time frames, it looks like you're getting a move up, right? You look like you're getting a move up with that bullish candle right there. You know, looks like you put in a double bottom here. And you looks like you put in a it looks like you put in a wave 1. You're putting in a wave 1. That's what it looks like, because it looks like your pivot was that 5 waves, 3 waves, 5 waves, and then you went into wave 1 of pure impulse right here, and then you retraced wave 2 right there. And that wave 2 retracement, unlike what you see in a lot of other assets, came down, and it took about as long as that wave 1 took. So that's a legitimate wave 2, okay? And this, instead of being a wave B, is a continuation. It's basically you know, the next degree up, right? So if this is primary, this is intermediate. Wave 1, 2, 3, 4. You know, it looks like you're going onwards and upwards. That's what MOVR looks like to me. The confirmation of this would be if yeah, look, you see, you're already, this is not a B wave. This is not a B wave. We're going to look at Bitcoin in a second because it's been a while since we looked at it, but this isn't a B wave. It can't be a B wave. It's unlikely a B wave because a B wave has to respect the phi ratio of that A wave. If this was an A wave, that B wave has already almost violated that A wave. So you're likely an impulse. Okay, so MOVR to me looks like it's moving and grooving. I'm not expecting a move down from here. I think there's more upside to come, if that makes sense. Okay, so I'm not touching my position for Moonbeam. I'm not taking profit early. I am, yeah, I'm just in it to win it. And actually, I can what I would do, and I should do, and I will do, is move my stops into profit here, and essentially just take this entire thing, and then hide behind the phi ratio. Boom. Done. If that thesis is correct, then we don't come back down there. Okay? Let's see. Yeah. Yeah. Okay. So that's what I see with Moonbeam. And Link. Okay, here's an example of what may very well be a B wave, right? Because you took too long to form this, what would be a wave 2. Okay, so, and this is 1, 2, 3, kind of like what Bitcoin did. 1, 2, 3. Okay, 1. Sorry. 1, 2, 3. Remember, everything's a fractal. So 1, 2, 3. 1, 2, 3. Pivot. Boom. I do expect to come down to between 786 and the 1618 of this A wave before moving back up. Would not be surprised. Would not be in the least surprised. On the high time frame, is there anything that we need to look for? This looks like a massive wave 1, wave 2 correction. Looks ugly, but it looks the part. Okay, if you take this, look at that daily stochastic RSI. How bullish does that look? Beautifully bullish. If you look at this, it took about 27 days to go up, and you took about 17 days to come down. Okay, so what it may be, if there's no strong relationship in time between those initial 5 waves and that 3-wave retracement, is it may be a corrective zigzag. So you may be dealing with, which is likely, 5 waves up, 3 waves down, but you're not in pure impulse, so you don't need to really have a strong time relationship. All you have to do is minimally retrace to the 0.5 of that, and you're good for a zigzag. So let's take the Fibonacci retracement, and let's actually take this. And yeah, you hit your 0.5, almost to the dot, almost to the penny. That's what I think is going on here. Let's take that. 1 second. 21 days. Okay. It doesn't matter. If you're making money, actually, yeah. 21 days. This is 5 waves up, 3 waves down. You're expecting 5 more waves up. It just looks like you're going to get that move. And on the really small time frames in Chainlink, you don't rule out the possibility of a retracement to, like we said, the phi ratio of this A wave. If you take this 3-wave move to the upside, right here is kind of a distribution or B wave pivot, and then you come down maximally to that phi ratio, that 1618, right, which would be a wick below this range. So we're back. This is like the Bitcoin scenario, right? If you do wick down to this area, you wick down below the support just ever so slightly, grabbing liquidity. So I'm going to check my link, and this is a high leverage trade, really high leverage trade. Relatively low margin, but really high leverage. And I am okay where I'm at. I'm okay where I'm at. I'm hidden below that phi ratio. So yeah, that's how I'd protect against downside there. Again, you know, if you're trading this, you know, be careful. You don't need to trade stuff to make money. You can just buy spot. We're at the beginning of a bull market. You'll make plenty of money, so don't worry about trading on margin. The other thing I'll say is if you don't know anything about trading margin, there's no reason to start, because remember, it's not just taking the trade. You have to know how to manage it. So if you don't know, that now's not the time. And also, yeah, just be wary or be careful to look at your particular exchange, whatever exchange you're trading on, because the pricing is going to be it's going to vary per exchange. That's what I mean. All right, DOT. Okay, this is the second to last one. Polkadot. This is looking good. Okay, why is it looking good? I like this. Just the first thing that jumps out to me is the fact that I have really big bullish candles. Okay, so candlestick analysis, we all know, sorry, that this type of candle right here is very bullish, right? When you have the body and a strong wick, that shows there's a lot of buying pressure. Okay, that's a bullish candle. And then the opposite is true. When you have a strong wick to the upside and then a body to the downside, that's typically bearish, okay? So this is typically, you know, what you're looking for. Now, obviously, all of that is time frame dependent. But on the smaller time frame, on the time frame that we're working in, and this time frame is appropriate. This time frame is appropriate because this time frame is the time frame in which we see this channel forming, okay? So I would say this is an appropriate time frame to do that analysis, and in this time frame, we can see really strong bullish hammer candles. I think they're called. We can see strong bullish hammer candles at the bottom of this range. Okay, so that tells me that this range is strong. Actually, let's draw this properly, because it's not the easiest range to perceive because it's not perfectly straight. So let's get our parallel channel tool and let's do our best to show or to see price action in this channel. Let's do our best. Okay, so basically drawing the channel, we're gonna use as much data as possible. We're going to try and connect all of the points of resistance and all of the points of support, or as many as possible. So on the bottom for support, I feel like this is the stronger support level, and for resistance to the top, whoops, didn't mean to do that. I did not mean to do that. For resistance to the top, this is kind of the level I'm looking at. Something like this. Something like that. Yeah? Does that make sense? It's still a contiguous channel. Part of me wants to pull this down a little bit. Like this. At least down to here. It's tough. It's tough. Because the bottom of this channel is a little tricky. I get it. I understand my confusion. I'm doing this wrong. This is a wave 4. This is a wave 4. Right here. This is a wave 4. This is a wave 5. This is a very nice wave 5 ending diagonal. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2. Whoops. 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay. So the confusion therein, this is an ending diagonal, very nice, this is the channel right here that we want. That's why I couldn't make a contiguous, you know, reliable, sensical channel, because that's all two different sequences of price action. So here is where we want to focus. And our resistance or support and resistance are like this. Okay. Yeah, something like that. Okay. So I'm seeing this. You have this is your initial breakup structure right here. It's a zigzag. No, it can't be because there's no 0.5 Fibonacci retracement. It has to be this right here. It has to start here. That has to be your. That has to be it. That has to be your A wave. This has to be your ending diagonal, actually. 1, 2, 3, 4, 5. It has to be that right there. This is end of wave 5. I'm sure if we turn on the volume, we get capitulative volume there. Let's see. Yep. See that? Right there. Volume shows the end of the trend. Okay? So, that's the initial breakup structure. That is the counter. Okay? Moving on. The secondary break of structure is here. And I think what you're doing here is you've already put in possibly your secondary B wave like this. It's possible. It's possible. Also, it's also probable, rather, that your secondary B wave isn't finished yet, and that's just the first leg of your secondary B wave, and then you're pretty much going to put in another one. In any case, the move here is this. To protect against downside risk, you identify your most recent break of structure, which is this secondary B wave, or whatever we're calling the secondary B wave, this A wave, this 3-wave move right here. You pull your Fibonacci retracement tool of this 3-wave move from the bottom to the top, and you protect against downside risk by hiding behind the phi ratio, which is about 576 for dot. So this is what I'm going to do. Yeah. Okay. That's what I'm going to do. Okay, another thing is, it's possible that if this is indeed your secondary B wave already, then you've gone into a pivot, 5-3-5 pivot. So 5, 3, something like that, 5. So you're in your pivot. So hourly time frame, maybe. For hourly time frame, perhaps. Daily time frame, bullish. All right, all the daily time frames are bullish. So basically, the big move is coming. It's just a question of protecting against downside risk. So we know that. That's what the indicators are saying. All right, so that's dot. Last but not least, key. This extremely volatile. This is a spot position. I mean, you could just look at the chart and see that it's an extremely volatile, low data type asset. I would, for this, as always, zoom out on the daily time frame. I identify a pattern. This looks like an inverse head and shoulders, bullish pattern. It's broken out, retested with a 3-wave move. It's on support. I'm expecting it to go up. That's that read. For these kinds of really volatile assets, I don't think it's wise to go onto the really small time frames and try to get cute. Just look at the higher time frame and do that. It's just too volatile. The risk is too high, obviously, to trade these on margin, on leverage, in my opinion. And I don't do it, so I wouldn't advise to do so. Okay, that's pretty much it. We're gonna have a quick look back at Bitcoin because it's been a while. It's been a long stream, but this is what we do. We put in the work during these times of. We put in the work during these times of accumulation, and we work so hard during these times so that we don't have to work later, right? We work smarter, not harder. Work hard when we need to work hard, and then later on we chill. When this trend starts going, it's so much easier to read, so much easier to enter positions, relatively speaking. It's so much easier to just let these things build. So Bitcoin is pretty much where we thought it would be, okay? What's that mean? We're saying that this is likely some sort of B wave, okay? B waves, one of the ways they feel like you're moving in tar or like molasses. It's hard to move in. Price, like, how do I say this? Price moves slowly and with great effort through the B waves. Okay, that's how they feel as a trader. The time it takes to go from up and down and sideways, it just takes long. Very likely that we're in a B wave. Impulses don't work that way. As you know, impulses happen very quickly. B waves, corrective patterns happen like that. Do expect for this to continue and then give us that downside that we've been talking about. So nothing's changed there with a little more data on the candles. Okay, even if we do get a small move to the upside here, that won't be pure impulse, and we know that that phi ratio is likely to be the cap of this upside move for Bitcoin. That is it. That was long, but I hope it was helpful. I hope that it was useful. Like, share, and subscribe, and good luck. Good luck, guys. Bye.